Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, March 3rd, 8:45 a.m., and we are officially starting out the month of March for 2025. And this is the first stock market open for the third month of the year. We've been through 2 months. January was really good. February was good until like the last 2 weeks. Then it was kind of like really bad, even though we're only like 3% away from all-time highs on the S&P. But we felt it in individual stocks like a Palantir that fell 30%, like a Robinhood that fell 30%. And now we're starting March. We got a lot to analyze when it comes to March. We got a lot of news this morning in regards to the cryptocurrency world that is having some ramifications on old growth stocks that we'll talk about. We got a green pre-market. We've had a green pre-market the past 5 days, and then it ended up turning red by the end of the day. Maybe today that changes. And we have a ton of announcements that were made this morning that are going to continue to be made in the night, aka Trump tweeted this morning that he has a very special announcement coming soon tonight. So we'll be talking about that, the implications of that, and what that means for the broader equity markets. So we got a lot to talk about. Thank you, everybody, for being here. I am in a particularly good mood today. The reason I'm in a good mood, and if you were on the Sunday Future show last night, then you knew I was already going to mention this, but your boy worked out today. Nothing crazy. About 45 minutes of cardio, and then I hit the sauna. Nothing. I didn't take any shots on the guns yet. We didn't get back into the heavy lifting, but your boy worked out today. And so I just in a better mood when you work out, dude. You're just ready to take on the world. See, I wasn't late today. I wasn't late. I was right on time. When you work out, you're right on time, all that stuff. So no, I'm excited, dude. I'm excited to start off March in a better position. You get that first workout in. It's been like a month since I've been to the gym. So I was definitely slacking, had to get back there. Also, I feel like I ate like shit in February again. And so the goal in March is to like not eat like shit and try to just like maintain the actual, I wouldn't call it diet, but just like, just don't eat bad stuff. I know I was traveling in February. I can't use that as an excuse anymore because I'm going to be traveling for the rest of my life at this point. So if I use that as an excuse, that's just like a BS excuse. But got back to the gym, excited to get back into it, and ready to rumble and keep going with the market open. All right, cool. So let's get started. I think we'll start off with crypto. We'll start off with crypto again. Good morning, everybody. Thank you for being here. Elton, Christine, Jeremy, Samir, Derek, Davis, Matthew, Erwin. He says, I'm at the gym right now hitting press movements. I love it. A lot of you guys in the meetups have been telling me that you listen to me while you're at the gym, which is awesome. So for those that are at the gym right now and getting it in, thank you for listening and thank you for being here as well. Okay, so let's get into crypto. I'm going to recap a little bit of what happened last night, and then we'll talk about the implications of what happened this morning. Obviously, it has been pretty insane. Real quick, let's just look at the pre-market action, and then we'll get into the events of last night that are pumping crypto. Robinhood is up 10%. The reason Robinhood is up 10% right now is because crypto is up about 8%. You can see right there, Bitcoin, 93,446. Bitcoin was at 78,000 last week. And now we're at 93. So obviously a 20% reversal, massive reversal. The reason this happened is because Trump tweeted last night that he is establishing a strategic crypto reserve, not Bitcoin reserve, crypto reserve. And we'll talk about that in a second. But all of the Bitcoin proxies are doing incredibly well. So if we take a look at the crypto proxies, you got Robinhood up 9%, 54.66. If you bought the dip last week, shout out to you. I know a lot of you guys said you bought the dip. I bought 100 shares at 45, and I bought about 70 debit spreads for $95. A $9,500 spread for January 2027. So I got more equity last week, and I also got more spreads. And those spreads now I have 230 of them in total. Of those spreads, I want to get another 20, just make it a 250 spread position. And that is a basically 5x if Robinhood can get to $100 by January 2027. So I have that, and I bought some equity. You got Bitfarms up 10%. You got MicroStrategy up 13%. It was at 300 at one point. Right now it's at 290. Iren's up 10%. Hut 8 Mining's up 12%. Coinbase is up 10%. CleanSpark's up 12%. Ethereum's up about 2%. Bitcoin right here, 93,000. And then you got BITX 2X leverage Bitcoin. That is up 21.77%. Now, it's nice to see all this crypto movement. And as a result of the crypto movement, we are getting some green in the NASDAQ right here, up 0.6% in the pre-market, and the S&P 500, which is up currently 0.3%. So it seems like the risk on appetite is, I don't want to say it's back, but it definitely feels like it's starting to come back based on the announcements that Trump made last night. Now, what were those announcements for those that did not see the Truth Social post? He says, a U.S. crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration, which is why my executive order on digital assets directed the presidential working group to move forward on a crypto strategic reserve that includes XRP, Solana, and Cardano. That was the original tweet. I will make sure the U.S. is the crypto capital of the world. We are making America great again. And then he quote tweeted that, and he said, oh, by the way, Bitcoin and Ethereum as other valuable cryptocurrencies will be included at the heart of the reserve. I also love Bitcoin and Ethereum. So, I mean, it was kind of crazy last night because for a good, I would say, 15 minutes when this post came out, it came out at 9 a.m., everyone was like, where's Bitcoin? Where's Ethereum? Why is he like so excited about XRP, Solana, and Cardano, which most people think has utility, but it's not Bitcoin? And then he quote tweets and says, Bitcoin and Ethereum are also part of it. It was kind of weird that he left out Bitcoin and Ethereum. But the point is, he mentioned all of them, and then we pumped. We pumped aggressively. Now, the nature of this pump, I think, is very important to analyze. So let's start off with this first piece of analysis. The White House is going to be having a crypto summit. This was from the White House a couple days ago, they announced, and it'll be happening on March 7th. Attendees will include prominent founders, CEOs, and investors from the crypto industry, as well as members of the president's working group on digital assets. The summit will be chaired by the White House AI and crypto czar, David Sachs, and administered by the working group's executive director, Bo Hines. So on March 7th, I think we're going to get a much more serious explanation from a sort of sophisticated legal perspective on how they're going to actually build a crypto strategic reserve. Again, it is not a Bitcoin SR, it's a crypto SR. And that has a lot more implications because I don't think a lot of people care about Solana, XRP, Cardano. I don't know who the hell cares about Cardano, or Ethereum, even though Ethereum is a popular one. Bitcoin is what people care about. And so the fact that they're including all four of those other assets is very weird. But nonetheless, that is indeed what's happening. And then this morning, before I went live, this is what Trump tweeted. Tomorrow night will be big. I will tell it like it is. Now, what's interesting about this is tomorrow is the State of the Union, for those that don't know. So he's going to be giving his first address to Congress in a joint session. And so he might be making some announcement there. On top of that, the White House this morning has said that you can expect a big investment announcement later today. So although Trump is saying tomorrow night will be big, he's talking about the State of the Union. The White House put out a release and said President Trump will be making an investment announcement later today, probably around 3 p.m. That's when he tends to do those press conferences from the White House in the Oval Office. And he's going to be making some type of announcement. What does that announcement have to do with? Does it have to do with Bitcoin? Does it have to do with the strategic, not the strategic reserve, the, what is that thing called? The thing the Saudis have? Why am I forgetting the name? The sovereign wealth fund, the sovereign wealth fund. Does it have to do with the sovereign wealth fund? Like what, because we established the sovereign wealth fund and Trump said he was going to fill it up with stuff, but like, what exactly does it mean when he's talking about an investment decision? So I think in the next 24 hours, maybe even sooner than that, we're going to get some details and we're going to see what's kind of going on there. Now, having said that, not everyone is happy with this announcement. So here's what Joe Lonsdale, who has been a really big supporter of Trump for the past 10 years, has said. Taxation is theft. It should be kept to a minimum. It's wrong to steal my money for a grift on the left. It's also wrong to tax me for crypto bro schemes. So Joe Lonsdale basically thinks that this is a total grift and that President Trump is filling up the bags of certain currencies that his buddies want to get rich off of, and he's putting them in the crypto reserve, which, yes, would be the definition of a grift. David Sachs, the crypto czar, he quote tweets that, and he says, nobody announced a tax or spending program. Maybe you should wait to find out what's actually being proposed. So you got David Sachs kind of saying, well, wait a second. Maybe there's something else in terms of how this is playing out. He, again, is the crypto czar. He's probably the person who recommended these assets to Trump. Why do I say he's the person that recommended these assets to Trump? Well, Bitwise is a company, and their top 5 holdings in the BITW fund, you might have heard of them before, they're one of the largest Bitcoin ETFs, are Bitcoin, Ethereum, Solana, XRP, and Cardano. Who is the seed investor and one of the largest investors of Bitfund? Kraft. Who is the founder of Kraft? None other than the crypto czar, David Sachs. It just feels oddly peculiar that the 5 assets that David Sachs has a massive stake in, not directly, but indirectly via Kraft, which still is, important for his overall financial situation, just so happens to be the 5 cryptocurrencies that Trump has picked as like the most important assets in the crypto reserve. My personal take on this is that it obviously feels like a conflict of interest. I would be lying if I said it doesn't feel like a conflict of interest. The one sort of nuance to that, though, is that I can say it's a conflict of interest. You can say it's a conflict of interest. Everyone can scream on the top of their lungs. It doesn't matter. You know, if we don't have the power to do anything about this conflict of interest, I mean, like, what do you do, right? Like you can complain about it all you want, but if it's happening, then it's happening. And the question is, as an investor, how do you want to be exposed to what's happening right now? But is it a conflict of interest? 1000%. I mean, there's no world in which you say it's not a conflict of interest. David Sachs tried to sort of change the narrative last night by saying, I sold all my cryptocurrency, including Bitcoin, Ethereum, and Solana prior to the start of this administration. That's fine. That kind of helps a little bit, but that doesn't mean he's not going to massively benefit from what's going on here, right? In terms of the amount of momentum that they're getting from these assets being in the crypto strategic reserve. So that's kind of how it's playing out right now. On top of that, talk about conflict of interest. Eric Trump, when Bitcoin was crashing to 80,000, said buy the dip. And myself and a lot of you guys made fun of him because he just seemed like an angry bag holder who was trying to convince people to buy the dip. In reality, I think we all should have realized, wait a second, this is the president's son. And if he's telling us to buy the dip, it's probably for good reason. And this morning he tweeted, "You're welcome, my friend. Hopefully I made someone's life just a little bit better. Now my advice hold for the long term." This is actually insane. It's actually freaking insane that the Trump's son told us to buy the dip, and now he's taking credit for giving, not investment advice, but you get what I like, for giving us the warning of holding. And now he's saying, yeah, hopefully I made some people's lives better. So now my advice is just to keep holding. You know, it's also funny. We were making funny, or I was at least making fun of Michael Saylor for saying, sell your kidney, but like, don't let go of your Bitcoin. This mother effer probably knew everything that was happening as well. I mean, Michael Saylor is very, very connected to the Trump administration. More likely than not, he was told, hey, like, there's going to be an announcement pretty soon, and you know, hold on to the Bitcoin and let people know to hold on to the Bitcoin because we're going to make an announcement. So someone knew, definitely Michael Saylor knew, definitely Eric Trump knew. I laughed at them saying to buy the dip when it was at 80K because I felt they were bag holding. And in reality, they were the ones who are laughing now, given that Trump has announced his crypto strategic reserve. On top of that, speaking about people who knew, another reason why people are feeling so icky about this Trump announcement, someone opened two massive 50x leveraged long positions, 72 million on Bitcoin, 120 million on Ethereum. They bought them when Ethereum was 2,100 and Bitcoin was 85,000. If Bitcoin and Ethereum drop by about 3%, they lose $200 million. That's how confident this person was that crypto would start pumping over the weekend. I mean, they opened these positions hours before the Trump announcement. And it's obviously because, in my opinion, either they're the biggest degenerate whale of all time that actually understands how the crypto markets work, or they kind of had a hint from somebody that Trump was about to make a pretty big announcement and they should go long crypto. And boy, did they go long. They went long with leverage to the tune of 50x, $200 million. They probably could be even already out of this position by now. But they had a 3% margin of safety, and they ended up making a lot of money on this. So it was Derek. It was not Derek. I can guarantee it was not Derek. I was talking to Derek this morning. Derek's been in crypto since he's been in Bitcoin since it's been like $1, right? He's been in Bitcoin for a long time, and he could not believe the level of corruption and insider trading, because that's what it is. Like, let's just be honest, man. That's what it is. It's insider trading. It's corruption. I'm not saying the Biden administration also didn't have these issues. I'm not even judging it, by the way. I don't think it has to be inherently negative or positive. It just is what it is. I think that's the most objective stance you can take. It is what it is. It's happening. And as an investor, you either position yourself for the upside of it or you protect yourself from the downside. But it's happening. David Sachs has the power. Trump has the power. Eric Trump has the power. Barron has the power. His son's probably influencing. Like, these guys are in power. The country voted for them, and they're doing whatever the hell they want to do. We can complain as much as we want to complain about it, but it's happening. And so personally, as an investor, I like Trump pumping crypto because my holding towards crypto is Robinhood. And I think that benefits Robinhood. And I overall believe in the crypto space, obviously, but I have my own self-interest to see Robinhood do well. Do I love how it's happening and how insiders have information before everyone else? Pretty obviously, no. I don't like how that's happening, but it's happening. And so I guess the question for everyone is, how are you interpreting what's going on right now? Are you buying crypto on this dip or on this momentum? Are you getting more exposure to assets? Are you taking advantage? Did you take advantage of the dip last week? Because I think if you're in the crypto sphere or you have any crypto proxies, you're kind of just in it and you're happily surprised. You might be feeling a little crummy about how it happened, but it happened. And so I think now we just have to kind of deal with the implications of it happening right now. Yeah, for all the people saying it's crooked and corruption is disgusting, here's my bottom line question. What do you do about it, right? What do you do about it? Like, yes, it's bad. I agree with you. I'm not going to disagree. Like, yes, it's bad. But what do you do about it? Because you can complain all you want that it's bad. But like, what is the implication of that other than complaining? And if that's the implication of just complaining, then that's fine. Like, it's fine to complain. But if we're all investors here and we want to take kind of advantage of the situation, I think there has to be a deeper plan in terms of how this is playing out. But yes, I would agree. You're not going to get me saying this is the most ethical thing in the world. It's obviously not. It's insane. And like some very OGs in crypto, like Derek, who's been in Bitcoin since 2010. He's admitted like this is the craziest shit ever. But it is what it is. It is happening. One thing I know for sure is that freaking Eric Trump, next time he tweets, we listen to whatever the hell he's saying. Absolutely insane. Okay, most of you guys are saying right here, buying some of the dip. You agree that it's messed up. I agree as well. Yeah, pretty much everyone's saying we're just rolling with how it's playing out. I agree. I mean, that's kind of what you got to do right here. Now, here's the thing I'm most curious about. Does this pump last? Because we're at 93,000 right now. I think it's helping growth stocks. It's helping the NASDAQ. If it doesn't last, then it was kind of we're here today, gone tomorrow. I think Trump has to seriously announce this strategic reserve ASAP, like within the next week, in order to keep the momentum sustained. Bitcoin ETFs have drained billions of dollars in the past 2 weeks. A lot of momentum has died out. The meme coins have died out, just like the risk on appetite has kind of gone away from the crypto sector, which means the crypto proxies have also been hit pretty badly, MicroStrategy, Coinbase, etc. So if we can get that momentum to come back, obviously that continues to help people. But the question is just if it's going to play out the way a lot of people think it's going to play out. Gene says this is not what Satoshi wanted. That's a hell of a point. This is probably not how Satoshi wanted it to play out, but it is playing out. All right, let's listen to Tom Lee, who has some thoughts on Bitcoin and the broader market bottoming right now. Let's get his perspective on this, and then we will keep going from there with some other headlines. Ironically, the only thing that's red right now in the pre-market, or one of the only stocks that's red, is NVIDIA. So we'll talk about NVIDIA and see what's going on with their narrative, because right now their narrative is just not doing that well.
A Fundstrat co-founder, managing partner, and Fundstrat Capital CIO, and I can just see you. This is Tom playing out exactly as you said. Choppy. You said exactly this. You said choppy for how long, but then the S&P again starts moving, and this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody's thinks the market's headed lower.
Yes, but instead we could be bottoming maybe this week.
And this is the choppiness you were talking about. And
Tom Lee's calling for a bottom this week, baby, which means 590 on the S&P, 587. If that's the bottom, then it looks like March might be a green month if he's correct about this.
I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs, because the tariffs and Doge are, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, it was a bad news headline, but markets actually rallied.
Yeah, World War III is usually not a good headline
yes,
for financial markets, or a continuation of very expensive, guns and butter. Using guns or using weapons and depleting them and having to rebuild them and everything else might be good, I guess, for the economy. It doesn't seem like a great thing. I'd rather be spending it on AI or something like that, wouldn't you?
Yeah. I think, or even rebuilding parts of the U.S.
Right, exactly. So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, what do we get, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye, because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
I would think that it would be, I mean, we know about these crack addicts in the equity pits. They want more rate cuts. I would, if it's not too bad, just soft a little bit, and it brings back the prospect of more than 1 or 2 rate cuts, I could see the market rallying on that.
Yes, that's right. I think if the job report is bad and maybe we initially panic, like even that day, then everyone's going to rethink and realize not only is the Fed put back because the Fed now will need to cut, but I think that some of the things that look like the White House wants to slow the economy, they don't want to get to stall speed. So then the White House, I think the Trump put comes back. So I think it helps markets.
Isn't the bar very high, though, for Fed rate cuts to be back on the table? I mean, let's say we do have a softer jobs report. I mean, the Fed and many Fed officials have said that the tariff issue they would look through. And so even if tariffs put grit in the economy and we have a softer sort of economic backdrop, that may still not be enough for the Fed to do anything. So that Fed put may not be worth much.
Well, I think it just depends on what the job number looks like. You know, the Fed has not worried about the labor market being inflationary, but they would certainly worry if unemployment's picking up or if we have a negative jobs report. I don't think it's negative, but something, you know, it could be well under 100,000. And if it is, I think the Fed would actually have to get off their hawkish paws.
What is a fundamental and the technical backdrop for?
If we get below 100,000 jobs on non-farm payrolls on Friday, I think that would be, yeah, the Fed has to cut. I mean, that like we are definitively losing a ton of jobs in the, or at least not growing as much as we need to. So that NFP number is going to be very important. Goldman Sachs thinks it's going to be 170. If we get below 100, I do think that would be concerning, but we're going to see on Friday what that number is.
Bottoming happening this coming week?
Well, you know, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news, the market's bottoming. But I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion, but we've seen sentiment turn negative. So yeah, maybe Friday, you know, but it could have already bottomed too.
So look, that's Tom Lee's thesis for why we're bottoming. His kind of core argument here is that sentiment has been horrible, which, I mean, is he wrong? Sentiment's been pretty bad. It's not been good. Palantir, by the way, up 4.2%. Palantir getting a nice lift right here in the pre-markets. Robinhood up 9.64%. The S&P 500 up 0.5%. But last week, I think sentiment was some of the worst we've ever seen. We saw multiple studies on retail participation starting to go down. We saw retail saying they're the most bearish in 2 years, whereas institutional fund managers have only 3% of their holdings in cash, which means they're the most bullish they've been in about 15 years. And so you got a big sort of dichotomy between how retail and institutional money managers are thinking about the market. And then overall, you know, even though the S&P was barely down, when a Palantir, a Hims, a SoFi, a Rocket Lab, which got to $15 or $16 at one point, like when all of those tank the way they tanked, Tesla as well got to 280 or 275 at one point, like, yeah, that'll really hurt sentiment. So the question is, we're still in extreme fear at 20 on the fear and greed scale. Usually that tends to be a bottom just historically. Last time we were this low was August 5th. That's I'm not stuttering when I say that. Last time we were this low on extreme fear and greed, it was August 5th, and we know what happened after that. Now, that doesn't mean it has to happen the same way, especially because August 5th, it happened kind of intraday rapidly, but it does mean that some of these equities might just be sold off pretty aggressively for no reason. Rocket Lab right here up 3.68%, especially if their earnings are matching their growth power. Now, here's the caveat. If we get a recession, all hell could break loose. And that's why Tom Lee is kind of hedging his arguments right here, Robinhood above 55 in the pre-markets, with this argument that he doesn't know what the labor market's going to look like. And I've heard a lot of anecdotal data from a lot of you guys around the job market just not being what people think it is, and a lot more people getting laid off. We know a lot of stuff in DC is happening with the government. So I think that's going to be something that no one really knows about. I think the next two job reports, initial jobs claims on Thursday and NFP on Friday, is going to be very important, because if we start to see a material weakening in the labor market, which is what the Fed has basically been saying, right? The Fed has been saying that the labor market has been weak, but not that weak, and inflation has been higher than expected, but it's not runaway inflation, which is why they're not cutting rates. If inflation starts moderating, which PCE on Friday showed us that it was moderating, 2.5 and 2.6 on the core, so nothing too crazy. It was in line with expectations, but the labor market starts to tank. And you know, someone right here says job market hasn't been good for a long time. That might be correct, but the perception has been based on jolts and based on the unemployment rate that the job market is great, right? 4.1% unemployment is not bad. Jolts, we have 8 million jobs open. The question is, who actually believes that? And if no one believes that, which I think a lot of people are skeptical about, we're going to get some harsh numbers pretty soon. if actually the job market is that bad. And then that begs the question, what is the Fed going to do? Because one of the Fed's mandates is make sure you have maximum employment. Now, again, it is easy for the Fed to cut if the labor market declines, because theoretically, inflation should decline as well, because less people have jobs, less people have disposable income, more people are scared to spend money. That should get inflation to come down. Will it play out like that? I don't know. I mean, we're going to have to see, but that is kind of the Goldilocks zone. Now, granted, if the labor market deteriorates rapidly, inflation will definitely come down, but at what cost will it come down? Well, the cost will be probably the stock market, because the stock market's not going to be able to sustain itself if we have massive unemployment. And so I guess we find out. I don't think we're at that level where it's just like losing hundreds of thousands of jobs a month or only adding tens of thousands. I think we're still in the adding of the hundreds of thousands, at least above 150. But we're going to find out on Friday once we get that job report and kind of see how that plays out. One more thing from Tom Lee. He has some thoughts on Bitcoin. So let's get his perspective there, and then we'll keep going from there.
Aside from these macro sort of outlooks, how about the AI trade? I mean, we've certainly seen signs of weakening, some skepticism there, especially surrounding NVIDIA, which hasn't filled in that pre-DeepSeek gap that it created. Where does that stand? How important is that for this next move forward for the bottoming process?
I mean, I think technology is still important for the next few years. You know, in our sector weightings this year, it's number 3. So financials, industrials, first and second. But I think it's just digesting a lot of the prodigious gains the last 2 years. But I don't think AI spending is really going to weaken. I know investors have a lot of good news baked in.
So I think the market, if it does resume a move higher, you think it's the same leadership, or there has been some rotation away from some of the Mag 7, and financials have looked strong. I mean, will it look different, or will the winners come back with a vengeance?
Yeah, I mean, in January, the first, let's say, five weeks or so, that leadership was different because it was a lot more tech outside of the Mag 7, and it was financials, and it was some mid and small caps. I think once we're through this rough patch, that's the kind of leadership we think will.
All right, you want to make some. I don't know why we told you people you were going to talk about Bitcoin, but now that we did, you do need to talk about it. I mean, it's come back a little bit. What did you attribute the move down below 80 to? Just that it's Bitcoin? What do you want?
Yes, I would say what's interesting is Bitcoin's not had negative headlines in February, but it was down. But I know our technician, Mark Newton, had talked about this being a cyclical downturn in Bitcoin through the end of March. So he was talking mid-January, getting down to 62. The weekend.
105 to 62. That's just Bitcoin.
Yeah, it's a typical.
Do the math, though. It's like, in a month, 105 to 62.
Yeah, that's a test of the resolve.
That hurts
bulls, right?
people that buy at 105.
Yeah, but as you know, Bitcoin makes all of its gains in 10 days. So if people sort of try to time this, they're going to miss out on a chance for Bitcoin to go back to its highs.
And by the end, at some point in this year, you think it gets, because last year you thought it might get to 150 or even higher, right?
Yeah, I think it's going to do better than 150 this year.
You do?
Yeah.
US dollar?
Yes.
What? 150?
Hungarian forint?
Yeah,
I mean, like,
I don't know. Something that's a lot less than $150,000. That's amazing. So a lot better than a lot higher than 150.
That's right, because it's becoming more widely held.
Yeah.
You know, if Citadel starts trading it, it starts to have more broad acceptance.
Okay. Tom Lee, thanks.
Thank you.
I love how Tom Lee's always so level-headed, dude. He just makes his prediction. He's not grandiose with it. He's not over the top. He's just like, 150 is what we're looking at, and everyone else can react in a more dramatic way. But Tom Lee continues to stay Tom Lee. Now, granted, he does think it could fall to 60K before that happens. He's been consistent with that statement, but he still feels the increased momentum in the concept of institutionalizing blockchains, Bitcoin, et cetera. Citadel is getting interested in becoming a market maker for a lot of these brokerage platforms. That obviously could bring more momentum into the space and more clients that are willing to trade Bitcoin. Bitcoin right here, 93,642 currently right now. One last thing on inflation, and then I want to talk about Palantir and what's going on in defense. Trueflation has updated their metrics. They think inflation's at 1.4%. So they think inflation has come down dramatically. A lot of this has to do with shelter and factoring in real-time costs. Again, the reason that Trueflation is such a good index and has been so accurate for the past 2 years is that they are not like the Fed. They don't have a 6-month delay. If egg prices drop tomorrow or rise tomorrow, they factor that in immediately. That's why they call themselves trueflation, right? That they're sort of a real-time aggregated index of what's going on. They think inflation's already below 2%. Right now, the Fed has us at 2.9. So if we get anywhere near 1.4, if we get even to like 2.3, 2.4, I think markets would love that, especially if that doesn't sacrifice growth at the same time. I mean, AKA having a sort of a massive unemployment spiral to get that inflation to come down. And so we're going to see if that ends up coming down at the not at the expense of jobs, then you're going to get rate cuts that are going to be natural. We're not going to get rate cuts that are going to be reactionary to a worsening job market. And obviously that would be relatively bullish for equities. Okay, let's talk about Palantir and let's talk about defense. So I know a lot of you guys have been telling me to do this over the weekend. I finally took some time to do a little bit of research on this. European defense stocks are going crazy. Put in the chat if you own European defense stocks, because I know throughout the year we've been kind of making this argument that European defense stocks are not as easy to, or Europe is not an easy place to invest in. Well, European defense stocks have been doing great. So Airbus is up 10% year to date. Safran is up 14%. Base Systems up 21%. This one's the big one. I'm not going to know how to say this, but Rheinmetall something. It's a German defense company that's up 66%. Thales is up 40%. Leonardo's up 47%. Dassault Aviation's up 24%. Saab AB is up 37%. Rolls-Royce is up 27%. And then ThyssenKrupp is up 5%. So, I know you guys are going to make fun of me. This is not ChatGPT. This is Grok, by the way. This is Grok, okay? We're using Grok. Grok is just, it's way better than ChatGPT at this point. The point is European defense stocks are catching a bid. And the reason I think they're catching a bid primarily has to do with a lot of European officials last week saying that they're going to commit 2.5%, roundabout that 2 to 3% range of GDP towards defense. Palantir, by the way, may be catching a bid off this headline as well. This could be sort of a macro pump that's happening with Palantir, but it could also be that European defense stocks are getting so much momentum because Europe's going to start spending so much more. We're talking about hundreds of billions of dollars over the next 5 years on defense. I would personally think if CARP can mend the relationship between Germany and France and Palantir, which at this point, if they're willing to spend on defense, they're probably looking for the best defense software, and they're already piloting some of Palantir's software in different places like Bavaria, then maybe there's a world where we can get some increased catalysts and some increased deals. But yeah, this is what's happening with European defense companies. I know I said the name wrong. You guys are probably making so much fun of me in the chat for saying it wrong. But look, I've not done a lot of research on these names. I know you guys have been talking about them for the past couple of weeks. I probably should have done some research a month ago to realize what was happening here. But these names are massively outperforming United States defense stocks. And a lot of them are outperforming just general growth stocks in the United States because Europe has been, I don't want to say necessarily undervalued or underinvested, but it's kind of just been left alone and people have kind of written it off to an extent. And you know, for some good reasons, right? Germany GDP growth for the next 5 years is expected to be 0%. So you got a bunch of reasons for why people don't like it. But if Europe's ready to spend on defense, I mean, these are the companies that should be getting the benefit. And hopefully that leads to spending in other areas as well, which encourages more innovation in the tech scene and Europe starts to catch a bid. On top of that, we've seen Alibaba get a bid as well. Alibaba's international with a lot of these European stocks, even though it's in China. And so international stocks are starting to get a little bit more momentum as well. Why? Because the US is expensive. Now, the US is cheaper than it was a month ago, given the volatility we saw in February. But you combine out of US exposure with cheap, with a tactical theme like defense, and then boom, you get some momentum on these European defense names that are catching a bid right now. Now, I don't even know if I could buy these defense names. Like, they're not on traditional brokerage platforms. Maybe there's an ETF that includes them. So I want to see if there's a way to get exposure to them. But if you're in Europe, if you're in Germany in particular, and you've been able to get exposure to some of these names, they're at all-time highs. And they are not doing too bad currently right now because of this. We got some SoFi news. I think I just saw this headline as well. SoFi closes 697 million securitization of loan platform business volume. This number, 698 million, this is not a new number, if I'm not wrong. This is a number that was supposed to be out there. Unless I'm wrong. SoFi closes 697 million. I feel like they announced this number a while ago, but even if they did, they officially closed about 700 million in loan platform business volume. Not bad. So SoFi has closed the issuance of $697 million in notes secured by a pool of personal loans originated by SoFi Bank. The transaction was co-contributor securitization with collateral consisting primarily of loans previously placed with loan platform business partners. Okay, so this is something that was supposed to happen. They're kind of announcing that it became official today. That's good. Look, the loan platform business is exciting for SoFi. Unfortunately, SoFi does not have any crypto exposure, so they're not getting any momentum from the bump that we're seeing with crypto stocks right now. But loan platform should reduce their balance sheet risk and ultimately give them a higher multiple than what they've been currently getting. So the more they expand on that, the more hopefully that should continue to help. Oh wow, you guys are right. So Robinhood does have some of these German defense names. Look at that. Rheinmetall, I know I'm saying it so wrong, is up 10% in the pre-markets. I didn't even know that. I could buy some German defense on Robinhood. Look at this thing, dude. 91. Oh, Grok was lying then. It wasn't up 60% year to date. It's up 91%. Okay, so Grok's not perfect yet, but 91% year to date. Holy crap. Rheinmetall. Rhine, is that how you say it? Rheinmetall? Rheinmetall? Well, however you say it, is doing very well. 28,000 employees. Wow, so this is a big company in Germany. Dude, 91% year to date. That is a hell of a bid. And it's only a $50 billion company. I mean, like, that's still not the biggest company in the world, but that means it was a $25 billion company in January. Wow. You look, I'm not going to say it right, dude. As much as you guys want me to say it right, it's not going to work. I'm always going to say it wrong. I'll try to get a pronunciation after this. Oh, it pays a dividend too. It has a small dividend. Dude, why didn't you guys tell me about this stock before it exploded, bro? All the Germans in the chat. Like, you couldn't have warned somebody about this, but it's been how long has it been around since? Since 2020. Wow, they went public in 2020. So this is a young company, a relatively young company. All right, cool. So RM, we're going to call it RM, doing not too bad. And for those that are in Germany that have exposure to it, you guys have been doing well, very well. Yeah, it's up 2,000% for the past 5 years. Or what is it? It is up 1,100% over the past 5 years. Over the max, it's up 2,400%. Oh, sorry, it came public in 2008. I was looking at that. So it came public in 2008. So it's been around for a while. But over the past 5 years is when it really started to pick up. It was $14 back in 2020. So definitely getting some momentum here. Okay, let's get a little bit more coverage on some of this crypto stuff. We have this on CNBC right now. And then we'll get into NVIDIA. We got 8 minutes until the market opens.
The group pulling back a bit this morning, but Sarah, Bitcoin's going to be up 20% from last week's lows.
This is good news, obviously, to the crypto bulls who were wondering what's going on because crypto had gone back down to 80,000. Post-election, there's going to be a summit on Friday, and there are questions about what this will look like. How much are they going to aim to buy in the crypto reserve? I think it's interesting and somewhat surprising that they are including other crypto coins, according to President Trump in there, mentioning Solana and a few others shot up in yesterday's trading. The other question that I have, and this is more a legal question, is can he do this via executive order? I went back to the creation of the Strategic Petroleum Reserve, which is our emergency oil stockpile. That was created through congressional legislation, came out of the oil embargo. So there's a question about whether they'll need Congress to do this, whether Congress will be on board. There are bills out there, David, that include a Senate proposal, for instance, that include buying Bitcoin. So how much, what's possible, and how popular it will be. Certainly it's popular if you own crypto, but there is this argument that people make that you risk taxpayer dollars for.
I'll ask that to the chat right here. Do you want your tax dollars in the United States contributing to a strategic crypto reserve that includes Cardano, Solana, Bitcoin, Ethereum, and XRP? Because right now it seems 50-50, but there's definitely a lot of people that do not want their tax dollars going to this.
A volatile, speculative cryptocurrency may not be the best use of money, especially when they're so serious, like Doge, about cutting, waste.
In the chat, I see hell yes and hell no. This is what I mean. It's kind of 50-50. Some people love it. Some people hate it.
And abuse and fraud and trying to clean things up.
Yeah. And again, you can see there are all of the different currencies, all of which were up again, because as Sarah said, there had been an expectation sort of the focus would be on a Bitcoin reserve. You heard that a lot, not necessarily more broadly speaking crypto, but of course the announcement, so to speak, in that post was was of crypto and does include a number of the other currencies, hence sending many of them up. And again, as we pointed out, Bitcoin has been above its current level, but certainly is retracing, or at least is, I should say, coming back up significantly from where it had been. This president does like to act through executive action. We've, at least 75 of them? I don't even know. I mean, there's just an endless amount. So you could imagine, who knows, that I don't know if it ends up in the courts, but like so many other things, but it doesn't appear, at this point that it necessarily is something that's going to work its way through Congress, Sarah.
Yeah, I mean, I guess they'll try, and we'll see what's possible. And I mentioned they have the summit. You know who's going to have a lot to say about this? Michael Saylor. He's joining us on Money Movers in the 11 o'clock hour. CEO of Strategy, longtime Bitcoin bull, right? That's the balance sheet of MicroStrategy.
And Michael Saylor did say, sell your kidney, but keep your Bitcoin. It looks like he probably knew this announcement was going to take place. S&P 500 is up 0.36%. We've got a couple minutes until the market opens. A couple headlines for you guys. Elon Musk tweeted over the weekend. He was with Trump at Mar-a-Lago at another event. They were on Air Force One together. Again, Elon is, I think, spending the majority of his time right now with Trump in the White House. He said it will require outstanding execution, but I think a 1,000% gain for Tesla in 5 years is possible. Now, he's not talking about the stock. He's talking about expected profit growth, aka earnings growth. And right now, the street has Tesla growing at about 250% over the next 5 years, NVIDIA 200%, Amazon 130%, Netflix 120%, Microsoft doubling, Alphabet 76%, Apple at 45%. Apple is one of the most expensive given the expectations over the past 5 years. So it's interesting kind of how the street's thinking of Apple. But Elon says, actually, no, we're going to grow our profits 10x in the next 5 years. And, I don't disagree with him, because if humanoids actually take off, I think they're going to more than 10x their profits very quickly, or in a very quick amount of time, which in 5 years, if they, Elon says they're going to ship 500,000 robots in 2027. Obviously, Elon's very aggressive with the timelines and the numbers, but if that happens, the earnings are going to go through the roof. Now, the question is, and this is why he caveated it by saying you need outstanding execution, because he's right. Like, you really need incredible execution to make it happen. Will they be able to execute at that level? I don't know. We're going to find out. But that doesn't mean Tesla stock goes up 10x, but it means the earnings growth go up. And I don't think Tesla's stuck at 280 if the earnings growth go up by 10x. We just have to see if that plays out. Speaking of Tesla, Morgan Stanley came out today, and they reiterated their top pick based on the drop that has happened in Tesla as Tesla. And they still have a $430 price target, and they're reiterating it as their top pick because of the volatility that we've seen. So they said Tesla shares are down nearly 30% year to date on a clear buyer strike. Bull case is 800. Tesla full year 2025 deliveries could potentially decline year over year, creating an attractive entry point to our preferred embodied AI name. As AI moves from the digital world to the physical world, we expect to see Tesla's TAM aperture further expand to broader domains, many of which are still not included in buy-side or sell-side financial models for the company. And this I agree with. I think that robots are definitely not included in the sell-side analysts. While the journey may be volatile and non-linear, we believe 2025 will be a year where investors will continue to appreciate and value these existing and nascent industries of embodied AI, where we believe Tesla has established a material competitive advantage. So, I mean, look, does Tesla go back to 250 or 350 quicker? Who knows? But definitely the overarching theme is still intact for what can happen with Tesla. And then last thing before we get into the market open, NVIDIA. So Steve, friend of the channel, wrote up a really good post on NVIDIA over the weekend. And this is what he said. He wrote, I believe that NVIDIA is selling off as the bears are trying to create a narrative around slowing growth. NVIDIA is a victim of its own success, as its previous blowout quarters have spoiled some investors in the market in general. When companies get to NVIDIA's size, it is more difficult to continue growing at the same rate. The fact that shares of NVIDIA didn't break out to the upside after posting annual revenue growth of $70 billion or 114% year over year is incredible. NVIDIA is a hardware company operating at a 55% profit margin and has just grown its net income to $72 billion, a year over year increase of 145%. Meta, Microsoft, Google, and Amazon have all indicated CapEx spending that amounts to $320 billion. I could not agree more with Steve here. I think that right now the market is expecting way too much out of NVIDIA. They're not being grateful for what they're getting. They're taking NVIDIA down as a result of that. NVIDIA right here down 1% as we are 20 seconds away from the market open. And as a result, I think eventually investors will wake up and say, it's freaking NVIDIA. Like, this is amazing. But that's not the narrative right now. And because that's not the narrative right now, I do think that's creating a juicy opportunity. But we're going to see in the month of March how that ultimately plays out for NVIDIA. All right, here we go. First Monday morning of March. Thank you, everybody, for being here. It is time once again to open the stock market. It is now open. Wake your ass up. Here we go. Robinhood opens up at $54. That's up about 7.5% on the day. At the pre-markets, it hit 55.18. So we'll see if Robinhood can maintain those momentums. If Bitcoin ends up tanking and this momentum is just a little bit of a fade, but we're going to see right now still up 7.5%. S&P 500 up 1/3%. Palantir holding its 4% gain in the pre-markets. Palantir 88.20. Maybe we're getting close to that $90 range, getting back there 3.5% right now for Palantir. HIMS up 0.5%. SoFi up about 1%. Amazon is flat. Apple is down. Nvidia, wow, 1.6%. The market, again, just does not believe in the narrative right now, or they're tired of the narrative. Whatever it is, they're not buying it. Nvidia right here at 123. MicroStrategy at 290. CleanSpark up 10%. Marathon up 10%. Coinbase up 7.5%. Tesla was at 300 in the pre-markets. Now it's up 2%. 298 on Tessie. SMCI, which got wrecked. SMCI is back at the same price I sold it at 2 weeks ago, which is insane given NVIDIA earnings, and the filing of the 10K, but still $41.94 down from 66. Looks like they're going to be fine long-term, but in the short term as a trade, this one just has not performed to the levels that people wanted it to perform to. Right now, it's up about 1%. AMD is up 2.2%. Rocket Lab trying to make its way back to 23, 21, 27 right now. That's up 3.6%. Robinhood right here, 54.12. That's up 8%. Palantir 4.7. Looks like it's going for 89. It's about a couple cents away from getting to that $89 level. We did touch it for a second, 89.04. Now we're at 88.99. Alibaba's up 1%. The Qs are up 0.5%. Google's up 1.3%. So the Google dip last week at 168, now back to 175. That it's not too bad. Enphase is down 5%. SolarEdge is down 5%. First Solar is down 2.85%. So all of the solar stocks currently are getting hit right now, and they are down. Maybe that has to do with market expectations of oil continuing to pump if we get any resolution to what's going on with Russia. So that could be a reason for that, or it could be a different headline. Transmedics, that's up 0.02%. Norwegian Cruise Lines, that's up 2%. They had a great earnings last week. SoFi is up 2.1%. SoFi trying to make its way back to 15. NVIDIA continues to get hit. 122.78, that's down 1.7%. MicroStrategy is up 12%. A little bit of the pump fading off, but still green. Meta is up 1.5%. So Meta goes green. Tesla back above 300, holding on to that $300 level. Where is Microsoft, which introduced its first quantum chip last week? 397. So still below 400, but at 397. Also, Amazon introduced a quantum chip last week as well. That one kind of went under the radar, but that's at 213, hit a low of 204 last week. So that one not doing too bad, but their quantum news also was something to pay attention to in the broader industry for quantum. Now, Jensen's going to be having GTC in a couple weeks. You're going to have a bunch of quantum leaders talk with NVIDIA on stage, so we'll probably get a little bit more understanding of what's going on with quantum there. Let's look at our spec portfolio and see what's going on there. All of it's green. Look at that. All the quantum names were Yardeni, D-Wave, IONQ. They're up. Big Bear is up. Archer is up 5%. SoundHound's up 5%. MSTR is up 15%. AMC and GameStop are up 2%. Oklow's up 4%. Very green and very risk on currently in these markets. Where is Grab? Grab is up 2%. Okay, so Grab acquired a company today. It's not GoTo. So they didn't do the big acquisition that I think they're ready to do, but they bought a grocery chain from a Malaysian private equity firm called Everrise Supermarkets. I don't know how much they paid for it. I imagine it's probably less than 200 million, but they did buy a new company today. And yeah, they're continuing to expand in terms of their acquisition strategy. Now, again, I think they're getting ready for a very big acquisition, hopefully in the next 6 months, which would be taking out one of their biggest competitors in Indonesia. We'll see if that happens. That's why I think they're not really issuing a bigger buyback, because they need that $6 billion in cash. But these small strategic acquisitions, I think, are great for them to do, because they're just continuing to monopolize the overall South Asian delivery space. Palantir right here. Wow. 6%. Holy crap. We are 10 cents away from 90. 10 cents away from 90. If 85 was the bottom or 81 was the bottom, that would be very nice to see. Now we just got to maintain these momentums. There's no specific catalyst for Palantir that I'm looking at. Dan Ives did say that DoD spending shouldn't be that big of a concern. He issued that tweet this morning that'll bring up, but I think the European defense stuff might be the reason why Palantir is pumping. That's my best take for why we're getting this green. PayPal's red. Okay, so PayPal's red. Again, Palantir very close to going green. PayPal right here, basically flat 71.19. Oh, Crossroads, friend of the channel, he did an interview with the CEO, Alex Chris. You guys can check it out on his channel. And that was a great interview talking about the future of where PayPal sees finance going. There you go, $90, baby, for Palantir. $90.30 for Palantir, $90.40 now. Let me bring up what Dan Ives said this morning. So Dan Ives said, Bin worries about Palantir DoD spend. However, to the contrary, based on our conversations, growing view in the 202 area code that the efficiency focus of the Doge initiatives could be a major coup for the likes of Palantir over the next year, plays perfectly into the Doge Trump theme. So from Dan Ives' checks with people in the DC area, he believes that Doge is going to be a catalyst, which I think all of us agree Doge is going to be a catalyst. The question is just, how much of a catalyst? Elon reposted Alex Karp again over the weekend on Twitter. So that growing relationship with Karp and Elon seems to be positive and hopefully results in some more momentum when it comes to Doge. SoFi right here, 2.28%. IBIT's up 9.7%. That's the BlackRock ETF. Apple's at 243. Apple goes green. Meta 676. NVIDIA still red. I am buying another 5 shares of NVIDIA. I'm going to do that right now, 121.4. I have 605 shares. I bought basically 100 shares last week. I'm buying 5 shares right now. And now I have, there you go, 610 shares. All right. 121.5. 121.5. 610 shares of NVIDIA, average is 125.28. I don't know, dude. At this point, I think I'm just going to buy like 5 to 10 shares every week if we continue to stay at these levels. Like, I feel like this is getting kind of stupid, but we'll see. We'll see how low it can go. We'll see if it gets down to the 115s again. It has been bouncing pretty nicely from this 120, 121 range. Maybe today is going to continue to bleed, but on Friday, it gapped up all the way to 125 from being down at 118. So we'll see if it is using this level as a bounce range or if it continues to bleed, but I don't think this place is a horrible place to buy the dip. Tesla right here at 303. Tesla going green. That's up 3.6%. Rocket Lab up 3.5%. AMD's up 2%. Verizon is also green. Costco's green. Nubank's up 4%. That's green. Salesforce is green. That's up 1%. Pretty much everything's green, dude. I mean, there's some pockets of red, but it's not like growth is green, values red, or values green, growth is red. Pretty much everything is green. Microsoft basically flat right here, and then the Qs are up 0.6%. Here right now. Christopher said I purchased 200 shares on Friday for NVIDIA. I don't hate that. I think below 130. I mean, you guys saw the podcast I did with Brad. For anyone who watched that over the weekend, thank you everyone for the support and taking the time to watch it. But I asked him about NVIDIA. He's the CEO figure, and he thinks he's going to ship millions of robots over the coming years. And I asked him point blank, like, do you need NVIDIA for these robots? And he said, look, there's other people out there, but we are using NVIDIA because they have the best inference training on our proprietary hardware that we use to build our foundation models. And so I don't think they're going to switch from NVIDIA anytime soon because it's very hard to switch to a different GPU that actually works. And if you have millions of robots in the world, I think those chips are going to be there. So I think the growth curves for NVIDIA, although the street might be thinking is cyclical, seems less cyclical than imagined, but that's currently the narrative right now. Bitcoin getting a little bit of red right here, down 1%, 91.8. That's why some of the proxies are selling off just a little bit. So we're not at that 93 level we were at in the morning. We are down about 1,000 points, but still just below 92. S&P 500 is up 0.5% or 0.25% here right now. Yeah, Robinhood's giving up some of their gains because Bitcoin's falling. So same thing with MSTR and Coinbase. Again, still green for the day, but instead of being up 15%, it's up 11%. So, I mean, that's another thing, dude. This crypto White House summit, whatever it's going to happen or whenever it's going to happen, we need it to happen, and we need them to legitimately say how much crypto they're buying, how they're getting the money to buy it. Are they going to be taxing more people? Are they going to be diverting funds from a different place? Do they need the power of the purse from Congress? Like, where is the money coming from? Because right now it's just smoke and mirrors. And I think a lot of people are still confused on the legitimacy of making this thing a reality. Rocket Lab right here selling off a little bit. So is Tesla. Yeah, pretty much everything. You're getting a little bit of a 940 dump, even though things are not turning red. They are going a bit more red from their intraday highs as the market opened, which is very similar to what happened in February. What we're seeing right now, 10 minutes into the market open, that's like, it's kind of deja vu of the last 2 weeks of February. We're going to have to see how the market holds up by the end of the day. But right now, very similar, even though Palantir is holding up. Palantir, one of the stocks that's actually holding up 6% here right now. What is your price target for NVIDIA? My price target is 180. And the way I get that is 450 of EPS with a 40 PE, which I think is very reasonable. And I think it's, I don't know, maybe, I don't know if I'm being too aggressive here. I think they're going to do 450 of EPS in 2025. They did 294 in 2024. I think growing that around 70, 80% is very likely, especially with their gross margins getting back up to 75% by the second half of the year. And if you just assume the growth rates that they're currently at, which is close to 85%, even if that goes down to like 65%, I think you get at least close to 425 a share, which means if you don't want to say 180, okay, give me 160, right? Take it down about 15%. But I still think that's a great return from 120, especially given the safety of owning a Mag 7 and still having that capital appreciation. Like, is Google going to return, 40% by the end of the year? I don't know. Maybe from these levels, given the drop to 170, it has a chance to go back to like 215, which would be about 20%. But still, I don't know how the Mag 7 I mean, Meta's already kind of done its thing. I don't think anyone can ask more from Meta. If it goes back to 740, I think people would be happy, but it already got there. Apple, I don't think is returning 30%. I don't think Microsoft's doing that. Amazon, I think, could do that, but their operating margins have to go up. And then what's left? Right? Tesla, but Tesla is just unknown in terms of how volatile the story is going to be. I think it's NVIDIA. I think that's the safest one, to be honest. But we're going to have to see if they get there. Starbucks, 52-week high. Wow. Starbucks, huh? Shout out to Josh Brown. He's been preaching Starbucks for a while now. He was on Friday preaching about it as well. 117. That's interesting, dude. You would think in a consumer confidence environment that is decreasing, one of the most expensive coffee shops would not get a bid, but it is 117 for Starbucks, and they haven't lowered their prices. They're reorganizing the menu, but they're not making the coffee cheaper. So that's interesting. I guess the market has a lot of faith in Brian Nichols as the new CEO. 9:45, we get new PMI. Okay, thank you for letting me know that because I didn't know that. So I'll pull that up in a second. In terms of some macro news, we have annual inflation in the Eurozone. It is down to 2.4% from 2.5%, which is good. So that one came down. And then Canada, their activity, so their manufacturing PMI went to 47.8, down from 51.6. So that is a contraction for Canada's global manufacturing PMI. And we're going to get the United States PMI in just 3 minutes right here. So that could be something that the market definitely reacts to. And then we get ISM manufacturing at 10 a.m. So we get global manufacturing in 2 minutes. And then at 10 a.m. and 15, we get services manufacturing. Marathon's up 9.4%. Yeah, the Bitcoin miners are getting some love. Again, the only thing with the Bitcoin miners is they really need Bitcoin to hold these levels. And we just got to see, right? Bitcoin now down about 2%. All right, Bitcoin, it's getting awfully close to that 90,000 range. And then after 90,000, you've got 89,000. So let's see. It's got to hold up. There's definitely people selling into the strength right now. So we got to see if we can hold on. Wow, NVIDIA. It's about to go below 120. Goodness freaking gracious. There you go, below 120. It's just incredible, dude. It is just incredible. The market, you think we got through February, the market would have got through their emotions. Nope, not on NVIDIA. They are not ready to take NVIDIA higher. I think there's a deeper issue with this narrative that the street's just not getting on board with right now. 120 right here on NVIDIA. SMCI is tanking because of NVIDIA. That's the simple answer for why SMCI is down 5%. NVIDIA falls, SMCI probably takes a hit as well. Okay, we'll get manufacturing PMI in about a minute. And again, manufacturing PMI is just a gauge of how much we are manufacturing in the United States. What is kind of the level of exports and imports that we are engaging in. We want that number to be above 51.6. That's what the market is looking for right here. Market's looking for 51.6. Previous was 51.2. If that's below 50, I could see markets getting hit. I don't think it's going to be above 51.6. That would be a bit too aggressive given the slowdown that we've seen from some other data points. Now, granted, below 50 means that inflation is probably slowing down. That's like the push and pull from this. So we're going to have to see what this number ends up being, and then immediately we'll see how the market reacts as well. Yeah, the tariff stuff on NVIDIA in Singapore, I think that's another sort of uncertainty that the market's dealing with. That's a fair point. I mean, until the market resolves their concerns about illegal sales of GPUs, that might be an issue that we are dealing with as well. What did you guys say on the poll? 52% of you said yes, your tax dollars, you want to go to the crypto reserve. Interesting. So still, it's 50-50, but people still believe that their tax dollars could be better spent with crypto versus anything else. All right, we should be getting the PMI number in just a couple seconds. And let's see. We got some of you guys are already saying 52.7. It should be popping up in a second. If that's the case, that's actually really good from a growth perspective. Is it 52.7? Let me see. PMI. Or is that a guess? Did someone say that's a guess? No, I think that's the number. Yeah, 52.7. 52, that's the number. That's the number. Okay. Trading economics is slow. 52.7. Okay, so how is the market reacting to that now? How is the market reacting? 52.7. I was wrong. I thought it wouldn't be above 51.6. It is definitely above 51.6. Where's the S&P? Little green candle, if you see it right there. SMCI back to 40. I think the market likes that. Yeah, very small green candle. I mean, 594.38 was the low. Now we're at 594.9. It looks like the market doesn't hate that. ISM will get at 10 a.m. We'll see what that looks like as well. But it means inflation could stay elevated, but it more importantly means that growth is not slowing down, which based on that GDP reading by the Atlanta Fed that I know freaked out a lot of people of negative GDP growth for Q1. The nuance to that is that so many people imported goods in Q4 to avoid the tariffs coming in Q1 that everyone thought was coming. That is why exports are going to be down in Q1, which makes sense. And that's why GDP is coming in negative. That doesn't necessarily mean the country's not growing. It just means we're not exporting as much in Q1 because we already did so much in Q4 because of the threat of tariffs. So I think that's why the market's not really selling off on that headline or didn't sell off on that headline on Friday. But yeah, we're going a little green. It's a little green. 595 on the S&P up from 594 based on this PMI headline. And now services will give us a better glimpse of if it's going to be above 50 from services and manufacturing. Palantir right here, still holding 90, folks. I think this has to do with European defense. You guys can give me your best theory on why Palantir is green. I don't think this is a macro rebound because everything that rebounded in the morning is now selling off. Not necessarily going red, but it's selling off. Palantir is not selling off. Palantir is holding 90 really nicely. To me, this is the European defense theme catching a bid on Palantir, and algos, fund managers, et cetera, are coming in and they're keeping it elevated, not necessarily selling it off here right now. Where is NVIDIA? Are we still dumping? We got a rebound off that PMI data from 119.5 up to 120. We'll see if that 120 can get back to 125 by the end of the day, or maybe closer to but before the end of the day, but got a little bit of a small bounce right there off PMI. Reddit is up 6%. Wow, that's weird. You would not think Reddit would be up 6% today, huh? That is weird, dude. Reddit took a nice beating from 230 back to 150. That is actually confusing to me why that's going risk on right now. But that one's going green. Palantir again up 6%. SoFi up 2%. SoFi trying to get to 15. Tesla holding 301, which is nice to see, at least not below the 200s. And then Rocket Lab right here up 2.5%. Currently right now. Yes. Starmer did visit their office with Palantir, so that was good. I don't know if that would pump at 6% though. I mean, that's nice to see, but they already have a relationship with the UK, right? They're already probably going to get tons of money from the UK. I think the market's thinking that other countries in the region can actually start paying Palantir, because right now they're going like less than 5% internationally, and the UK is the majority of that 5% in the first place. So I don't know. I think maybe the market's more excited about European defense spending as a bid, but again, that's just a narrative. We don't necessarily know if that's going to be the case. But I wouldn't doubt it, dude. I mean, if Palantir software is that special, and we know it is, and it's been able to produce amazing results for the United States defense complex, then I think it would do the same for Europe. We just got to get in the room with these guys and get them to actually care. S&P is now basically going red. There you go. S&P goes red. Wow. Very short-lived rebound from that PMI data. Now going red. Not enough to keep the market elevated. Even Robinhood giving up most of its pump. Now down, now almost down. It's still green 2%, but down about 6%. And then Bitcoin, $30 away from 90,000. the pump is being faded, at least in the broader crypto sector. Hope says, yo, Mitt, I finally forced myself to try out Grok, and holy crap, it seems better than the other ones. Being able to see its own thought process and how it asks itself questions is awesome to see. Yeah, I agree. And the other beautiful thing about Grok is that it's fast. It's really fast. Like I compared it with ChatGPT over the weekend. It's night and day how fast Grok is. So Steve was on the show yesterday and he was talking about how he used Grok for an hour yesterday because of how amazing it is. Like, it is really getting people to reconsider what's their daily LLM that they're going to use. And it's just better, dude. Like, it's objective. And if ChatGPT comes out with something good, I'll be honest and I say if it's better. But as of now, Grok is incredible. And Elon's got something really special right here. The question now is how they're going to monetize it and use it long term. I really wish Tesla had bought a piece of XAI. I feel like that was such a missed opportunity. Like, Tesla could have put $1 billion into, like, it could have been so simple. Because XAI, their first raise was at 18 billion. They're now worth 75 billion. So if Tesla had even put $1 billion, that would have been worth 3 billion by now. Like, it would have been nice to have exposure to it, but it's weird that Tesla didn't do it. Maybe because Elon was a bit afraid of just like how much compute they would need and how much money would be involved. But it's working. It's working pretty damn well. And hopefully we get some user stats because ChatGPT has 400 million monthly actives. If Grok can get closer to that 100 million, because I think they're round about that 100 to 150 million, then they're definitely going to be a suitable threat to GPT. Roblox right here is up 1.4%. SoundHound's up 2%. Archer up 2.38%. NVIDIA continues to be red. Reddit's up 5%. Robinhood up 1.54%. Robinhood's giving up a majority of its pump today. MicroStrategy as well, still up 10%. Grab at 495. Grab's holding up at about 2%. SMCI down 2.7%. And then Starbucks right here up 0.5% on the day currently right now. What else do we have? Grok is free if you want to try it out. You're going to have limited usage, but Grok is free. If you go to grok.com, you can sign up. So you don't have to be part of X to be able to use it. But Grok is green. The VIX is spiking up. It's still down 2%, but it is up from the lows. So you are getting a little bit more volatility. Where is fear and greed? We are at still extreme fear. We are lower than where we were at on Friday towards the end of the day. We were at 20 on Friday. Now we're at 18. So still in the zone of where at least fear and greed is thinking that the market should be sold off. Okay, let's see what other headlines we have. So definitely going red a little bit. We got PMI data on ISM coming out in 8 minutes. S&P is red. All these other stocks are being sold off. Robinhood is trying to fight for its gains, but that one's getting sold off. NVIDIA right here, down 3.2%. We talked about the Tesla growth headlines. We talked about Morgan Stanley as well being one of the main, or having Tesla as one of their main picks. Oh, T-Mobile. Wow. This is interesting. T-Mobile's launching a phone. Where's T-Mobile right now? Like their own AI-powered phone. T-Mobile right here is up 1.33%. This is weird, dude. Whenever these companies try to do their own phones, it's always interesting to me. T-Mobile's launching an AI-powered smartphone for $1,000. Wow, in partnership with Perplexity. Huh. Interesting, dude. So some of the AI software companies are trying to work with the hardware manufacturers to build their own proprietary devices. The device will have AI capabilities with Perplexity transitioning from an answer machine to an action machine, handling tasks like booking flights, sending messages, and making calls. Is anyone buying this? Dude, whenever I see these products, I'm just like, no, dude, I'm not giving up my iPhone for a T-Mobile Perplexity device. Like, I'm always so curious when companies think of launching this stuff. I'm like, who's going to buy this? Like, who's really going to buy this stuff? You'll have like some tech YouTubers buy it to do a review, and then they're going to shit on it during the review. And then it's like, I don't know. This never seems to be the angle that I think the non-hardware companies like a T-Mobile, Verizon should go down. But I feel like Perplexity should be partnering with Android, right? And being like, hey, like, let us be the deal. But then again, Google owns Android. Google Gemini probably wants to be the platform there. For Apple, they have a partnership with GPT. Like, Perplexity is in a weird situation to me. They're worth $9 billion. They're doing less than 50 million in revenue. Most of their product to me is just a GPT or a Grok wrapper that summarizes the answers, but it uses the backend API of the actual LLMs, which means why wouldn't people just go to the LLMs? Like, I don't want to be necessarily super bearish on it because they have a ton of users, but I'm very confused. What is the moat on a platform like that? And, you know, I guess we're going to see as the AI wars play out what ends up being that moat. Palantir right here, getting a little bit of a fall now. Palantir still susceptible to some of the red. 87.35, that's down that's up 2.8% after it was up 6%. But we are red, or potentially are going to be red on Palantir. Robinhood is very close to going red, 17 cents away. Yep, market's giving it up. Market's giving it up. The first day of March, at least in the first 20 minutes of the market open, does not have the momentum yet. Now, granted, March is supposed to be a relatively strong month. February sucks. March is supposed to be a lot better. This is what the chart looks like for March. We're supposed to average 1.38%. However, the majority of that 1.38% in March does come towards the back half of the year. So it's a solid month, but it tends to be towards the 15th to the 31st of March, not in the beginning. So I guess we'll see what happens in the first 2 weeks. But yeah, we are feeling a little bit of that red. Thoughts on Reddit? I like Reddit. I have 200 shares of Reddit. I don't hate Reddit. I do think Reddit's expensive here. On the technicals is why I bought it at around 165. So that's why I own Reddit. But I think in this environment, Reddit should be selling off, to be honest. I don't think this is a conducive environment for Reddit to be going to the moon, which, yeah, it's down about 2% already. But I don't know. I think Reddit does have a bit of a moat. I think their growth is phenomenal. It's just, even at 160, dude, I think fair value for this thing is closer to 120, but I guess we're going to see kind of how it ultimately plays out. The biggest thing about Reddit is, can they keep licensing their data to these LLMs, and how much money can they bring off that? But that is yet to be seen, how big of a business that becomes. Wow, Robinhood goes red. There she goes. All that beautiful green gone. All that beautiful green gone. Below 50. Dude, is this what it's going to be like for 2025? Like, every single day we get hyped up in the morning, and then SoFi red, Grab is about to go red. Like, I know Grab wants to break out to $5, bro, but these algos are not letting this thing. They're not going to. Your Grab's not going to be at 550 if Nvidia's at 115. Like, that's just not going to happen, unless Grab actually, like, you know, has an acquisition or something that's independent of the market. But if it's trading with the market, it's going to get hit. Tesla, 293. Like, you bought it at 301 this morning. You think there's a reversal? Nope. You're back below 300. Rocket Lab at 2168, back at 2054. AMD, back below 100. I mean, goodness freaking gracious. Every single day for the past 2 weeks, this is what it's been. Bitcoin below 90. Well, why not? Why freaking not? And it's not just below 90. It's about to go below 89. 400 points away. I mean, Celsius is green. All right, so Celsius, how green is it? Is it actually good? It's up 1%. All right, so Celsius. But Celsius, the majority of the earnings pump. This thing was at what, 40 or 37 or something? It was at 36. It was at 36. And all of that got taken away as well. I mean, the market's been brutal, bro, in terms of just, and I don't want to mean brutal in terms of like, oh my God, it's like recessionary or like it's 2022, but brutal in terms of getting your hopes up and then taking it away, which is probably better than like continuing to go down, right? Like 20%. Like, no one wants to see down 20% on the index, because individual stocks would crash at least, 40 to 50%. But it is cruel every day giving us this hope and then taking away. There's an author called Berlant, and he writes about this concept of cruel optimism. It's actually a debate argument. And the whole concept of cruel optimism is this philosophical thought project around people getting excited for something to happen in life. And usually that excitement is determined by the state. So he's a political scientist. And he's basically like, the government will like offer you these ideas of hope and like this concept that, things will be okay and you can chase your dreams and the government will support you, yada, yada. And then through the very nature of the infrastructure of the government, they will take that away. And it's a very form of optimism that ends up being cruel, because you get super excited for something and then you get let down. So the way it works in debate is that when people try to like act like activists or something via their arguments, it's an optimism. It's an argument my kids used to read, because it's like you're hyping up something to be seeming as if it's going to be amazing, only to tear it back down, which is actually worse than just telling us that things are going to be bad. Right? Like, just tell me shit's going to suck versus telling me things are going to be really good and then telling me it's going to suck, which is basically what the market's been doing. And, it's how we got to deal with it. And maybe it's the punishment after 2 years of blood green, or not blood green, that doesn't make sense, but bright green. Now we're getting this up and down momentum. All right, ISM, what do we have here? 50.3. That's a little bit lower than what the market expected, 50.5. Maybe that's why we got red as well. 50.3. Manufacturing for ISM came in at 47.6. That is definitely lower than 50.6, which was what was expected. So you got 50.3 on ISM. You got 47.6 on ISM manufacturing. Construction's negative 0.2. The market thought it would be at 0.3. Construction spending month over month. That actually makes sense because of the housing data we've seen. ISM manufacturing new orders 48.6. The market wanted 55.4. Holy crap. And then manufacturing prices, guess what? They're up, which is not good for inflation. 62.4. Market thought it would be 55. Basically, all 5 of the metrics you're looking at on the screen came in worse than expected. PMI, miss. Manufacturing unemployment, bad miss. Construction spending, really bad miss. New orders, really bad miss. And then manufacturing prices, also really bad miss, 62.4 versus 55. That's probably why we're going red. On every single metric, we came in much lower than expected. Now, granted, that's not the full story on the broader market, but we're down 1/3% on the S&P, and I can't imagine it's not because of that ISM data, which, for summarizing it in a nutshell, means that we're contracting. That's what all of that data means. It means that the economy is not growing as much as people thought it might have been growing. Which the first reaction from the markets is not to say, oh, that's good for inflation because inflation is going to come down, which theoretically bad news is good news, right? From that perspective, this is more so, oh no, people are going to lose their jobs. I think that's the reaction the market's seeing. And that's why NVIDIA is down 5% here right now. So there you go. That is probably explaining some of the market volatility. Now, does that increase the probability for rate cuts? That's a good question. Let me take a look at rate cut probabilities for the month of March. So March is still 95%. May, we're up a little bit, 26% for a cut. In June, we're at 56%. So June, I think, is up about 5% based on this data, which is good that we're going to get a cut in June. The hope is the market doesn't collapse before that. I forget the market, but the labor market doesn't collapse before then, because that'll have whatever impact it has in the stock market. But that is the implication of a weak ISM, is that people lose their jobs, right? So I guess we'll see. Now, granted, again, that does not make me necessarily bearish for the broader market, because I still think the Fed can manage it with inflation coming down. And I still think there's other catalysts that outweigh some crappy ISM manufacturing data, aka AI. Like, AI is deflationary. AI increases productivity. We are just in the early innings of seeing that happen. That stuff cannot be ignored given the amount of momentum that it's having. Now, someone might say, well, oh, AI also leads to job losses. Yes, to an extent, you're going to have job losses and more unemployment. But if you have more productivity in some of these companies, that can still lead their share prices to going higher, simply because their net income margins become significantly higher along with their free cash flow margins, even if they are having more unemployment. The ramifications of more unemployment is that people don't have as much money to spend the economy, which does affect Google, Meta, Amazon, etc. The question is, if Amazon is saving, $10 billion a year because of costs, or they're getting $10 billion a year of net income because of increased productivity, does that outweigh the unemployment that broadly affects the economy? And I guess we'll find out over the next coming years, but I don't think that necessarily means earnings growth goes to shit, and then we have a bear market. Apple right here is going red. SoFi is going red. Alibaba is red. Palantir is still holding up green. Robinhood is red. Bitcoin just above 90,000 again, back above 90,000. Celsius is up 1%, and then Nvidia right here, 118.99 on the day. Trump is making an investment announcement today at 1:30. So the White House did announce that an investment decision is coming. I didn't know it would be at 1:30, but if that is correct and it's at 1:30, then I guess we're going to see what Trump says. And if he pumps anything today. Yeah, it's definitely going to be at 130. Yep, that's confirmed. 130. Okay, so the White House said it's at 130. All right, cool. So hopefully Trump does not inspire cruel optimism within all of us. And hopefully it's just regular optimism here. I probably won't be live for the announcement. I'll cover it on the market close, though. Probably won't be live, but on Twitter, if you follow me on Twitter, that's in the description. I will definitely be posting about it as soon as it comes out. Why would the Fed cut when this data means higher inflation? Well, no, this data means lower inflation. If we are not manufacturing as much as we were before, that's what the ISM index and the manufacturing index came in to show us today. That means we're not exporting as much. We're not importing as much. We are not building as much, which means people are probably not spending as much, which means inflation should come down. The good thing about all the data we got this morning is that it weakens the labor market, but it also weakens inflation, which is the perfect combination for the Fed to cut. The nuance here is, does the labor market weaken at a more aggressive pace than inflation can? Because then you have recession. And then you have emergency rate cuts to try to stop the recession, which ends up still being a recession because everyone gets scared and they sell off all their stocks because they're afraid of the market. And you get into a pretty crappy scenario. So I think that's what the market's kind of, at least perceptually, teetering on the edge of, even though, the S&P is barely down from all-time highs, but that's kind of the fear that we are seeing right now. Farzad right here in the chat. Thank you, Farzad, for being here. I did a new podcast on Farzad's channel, by the way. I'll link it right here for those that didn't get to check it out. We talked all about Elon, Doge, all that good stuff. But Farzad says that pumping shitcoins and the Epstein list debacle are giant L's for the administration. I can't say I disagree. I cannot say I disagree. I mean, look, I'm not a fan of Trump pumping his own meme coin. I don't think that's the best thing in the world. I also am not a fan of the Epstein list basically being completely redacted. Now, I'm going to give them a little bit of the benefit of the doubt. They said there's more parts coming, but the first part was an absolute nothing burger. There's nothing new. So Kash Patel did say we would get it on day one, and we didn't get it. So, I mean, look, I know he just got in, but don't say day one if you're not going to say day one. So, look, I'm still hopeful we get the actual list because, and also, where's the JFK files? Where's the MLK files? Trump signed an executive order in January that all of that would be declassified. We haven't seen any of that yet. So, I mean, we're like, those are things that definitely need to happen, and hopefully they do happen. But in terms of Trump pumping a shitcoin, yeah, I've never been a fan of that. I've been pretty honest about this. Now, granted, my take here is that what are you going to do about it, right? Like, it's a grift. It sucks. Yeah, a lot of insiders are making money off of it. But at the end of the day, well, one thing you can do about it is not buy it. I mean, if you bought the Trump meme coin, I don't know why the hell people thought at $50-$60 it was worth buying. And I'm not even just saying that in hindsight. I'm just saying in general, like, that's just stupid, bro. Like, it's Trump's own personal coin. Like, it's like, there's no way in hell that has any legitimacy to actually maintain momentum. Same thing with DJT. That stock has been super stupid. I mean, maybe as if you've been trading it in certain ways, you've been able to make money off of it. But as an investment, as a long-term hold, like, come on now. Like, this is just dumb. So it is what it is. He's pumping crypto, which is nice, but his shit coins that he's pumping is not the greatest thing in the world. But I guess we're going to see. I guess we're going to see eventually how this ends up playing out. What's redacted? Pretty much everything. Pretty much everything is redacted. They didn't really introduce they didn't put out a list with the names of the people that were on the island, which is what they said they were going to do. That hasn't come out yet. Now that maybe is in part 2, part 3, but everything else in the first part is redacted. So there's still nothing really there that people are excited about. Okay, cool. So let's move on to an update from the suits, see what they're saying right now about the markets, and then we'll keep going from there. I'll try to get some other headlines on what's going on with NVIDIA. I think we do have some Singapore headlines I'm seeing across my screen right now. That could also be contributing to why NVIDIA is down right now.
And arguably that's what's gone on. Just in the sense that the market has, especially in the areas of the economy that would probably be most affected, it has administered some punishment there. If you look at the auto stocks, if you look at things that are right in the crosshairs, I do think, though, there's a longer term principle that says high uncertainty is a buy. It's not a sell. In other words, when people perceive this much uncertainty, presumably a lot of it's gotten into the market. Presumably it means that they've held something in reserve. And so in theory, you should wait for that, kind of uncertainty peak and then a clearing event. Now, what's interesting is how this market has metabolized all this into last week and the end of last week.
Let's get an update. Let's get an update right here on manufacturing PMI.
And we are going to get jobs at the end of this week. This is a big week in terms of potential catalysts beyond today's numbers on manufacturing that Rick just reported. We're going to get the ADP employment report. That's the private sector read. And then Friday is the big jobs report. There's an ECB decision coming this week where they are widely expected to cut rates, and they got some better inflation data that would lead them to that point. And then the beige book, of course, the Fed pays attention to what the districts are saying around the economy. The president will address Congress, said he's going to be not hold back on that. So eagerly awaiting his speech. And then the tariffs are expected on Canada and Mexico tomorrow, unless there's some sort of a deal that President Trump can.
So I forgot about that. I forgot. Tomorrow's March 4th. And legit, Trump said on freaking Wednesday that they're going to do, holy crap, the 10-year, that they're going to do tariffs on Canada and Mexico. Why is the 10-year tanking when we're about to do tariffs? Is weird, right? Well, one of the reasons the 10 years tanking is because that ISM data was really bad. We just went through it. It's negative, came in worse than expected on 5 of the 6 metrics. So that means we're not manufacturing as much. That means we're going to have less inflation. Therefore, the 10 years falling. However, if we're going to tariff the crap out of 2 of our biggest allies tomorrow, I don't know how that's bullish for the 10-year, which means the 10-year, I think, is calling BS on the tariffs. And it'll be very important to see tomorrow if we're actually going to get those tariffs or if it was another bluff by the administration.
Can work out. By the way, on jobs, when there's a lot more focus on jobs, because we are getting some signs that the job market is weakening further. What Rick just reported inside the ISM survey, the jobless claims number last week was very elevated, for instance. So we'll see, and it matters because if we do see some more pronounced weakness in jobs, that's what causes the Fed to pivot away from its on hold stance. They said they were watching out for weakness in jobs. They want to preserve the jobs market, so that could lead them to cut sooner rather than later. We're about 2.5 cuts priced in for all of 2025, which is a little bit more than where we were early February. So there's a lot riding on this jobs report, as always, but even more so. Also, there's this idea of there's the Fed put, and then there's the Trump put. Is he going to get worried about the economy and maybe hold back a little bit on some of these tariff policies?
Yeah, although the Journal or the Times over the weekend wrote about how he's.
Let's bring on Kris to the show, get his thoughts about what's going on currently with this 10-year and the tariff situation. Kris, good morning.
Good morning, man. Can you hear me?
Yep, you're good.
Okay. Yeah, I think it's because people are starting to see that the economy is feeling the impacts of the uncertainty. And so a lot of people are just saying, you know what, I don't want to be in risk right now. And I'd rather be hanging out in treasuries. So a lot of people are buying up the longer dated treasuries to lock in like exceptional returns, especially when you consider like the risk to reward scenario with equities. Equities traditionally, you know, they rise about 7 to 9% on average per year if you do like for a long period of time. The problem is that's depending on like what base level valuation you're talking about. So, you know, a lot of companies are trading at higher valuations. So a lot of people are just like, you know what, I could get a decent return by just being in secure stuff. So why not do that? So right now the market is just pricing in a lot more uncertainty.
But why is the 10-year down if tariffs are coming tomorrow?
Well, no, it's because people are buying up the treasuries, right?
No, I get that, but shouldn't they be selling it off if inflation is going to increase because of tariffs?
No, I think the whole narrative is tariffs causing inflation is a little bit short-sighted. I think the purpose of these tariffs is to slow down economic growth to the point where, you know, job creation, liquidity, all of that stuff is being drained right now, right? The government's not spending money, it's cutting back. All of those things tie into a lower 10-year, which is what, you know, Scott Bessent spoke about. And I think in the short term, we're going to have to deal with some of the pain. And that's what's causing all of this. So I think overall projections on growth were a little bit too much. And the amount of rate cuts that were being priced in was too low. I think now people are probably reaching towards maybe 3 cuts by the end of this year. And if we do get 3 cuts, that means that, you know, that means that something is bad happening. That's why that's why the market is saying 3 cuts. So
real quick, Kris, I got to interrupt you. We
Yeah.
got some breaking news. Trump and TSMC are announcing a $100 billion investment in the United States as per the Wall Street Journal.
I mean, that's great and all, but that's I don't know how much that's actually going to end up coming to the market in the meantime. So it's nice to see that the president is expecting a lot more, investment in the United States, but we'll see how that actually pans out.
I mean, this is conducive with Taiwan semiconductor, because they already invested in Arizona, right? So they're expanding it to the U.S. 100 billion, along with Stargate at 500 billion. Do you think these investments are meaningful to the narrative around the economy right now, or they're just like kind of shit? Like same thing with Apple, 500 billion. Are they real investments, or you think they're just BS?
I mean, you never know, right? Like a lot of people will. Maybe this is a way for a lot of companies to get into the good graces of Trump, and maybe that's what it is. I don't know what the economic impact is going to be. I mean, based on that news, look at TSMC; it's actually down 3%.
Yeah.
So Nvidia's probably look, Nvidia's down 5%. So even that news is not raising prospects. So people are kind of calling BS on it, in my opinion, in the short term. They're just saying, yeah, okay, we'll see what happens.
Okay, what is your take on Trump pumping the hell out of the crypto industry?
I'm not a fan of it. I wasn't a fan of it even when he brought it up during the election stages. I think crypto is too speculative, too volatile to be held as an asset class by the government. I mean, individuals, if they want to do it, that's totally up to them, but then again, what do I know? I have never really been the biggest crypto maxi anyway. I do think that there are pockets of opportunity when there's different strategies that are being used by people in the cryptoverse to basically make money on optimism and defeatism. I mean, you see this with the short sellers on all the, what is that thing, with the Michael Saylor things with MSTR, where they're making money on the volatility. So I don't know. There's definitely going to be winners and losers. People who know how to play the market dynamics, they're going to do well. I think a lot of other people are just, I feel bad whenever I see these new meme coins come out and people get rugged. I mean, it's kind of depressing to see that, man.
Do you think there's a legitimate case for tax dollars to be spent on a Bitcoin reserve?
I personally don't think so. I think, we've got debt. We've got to deal with the debt. That's probably the priority that we should be setting, right? If people don't have confidence in the US dollar, then that's way worse than, hey, we don't have a crypto reserve. So I think right now the government's goal should be to get our fiscal health in order, get ourselves in a position where we're not looked at around the world as a pariah. Because I think one of the sad realities that we have to all kind of come to terms with is that a lot of the decisions that the Trump administration have made over the last 60 days, well, 30 to 60 days, because some of the decisions were pre-inauguration, I think those are causing a lot of rifts in the market. I think Tom Lee has spoke about this, and I think some of the other people have spoke about this, that this is part of a process that Trump and the team want to do, which is bring uncertainty into the markets early so that this way they can come and rescue the economy later on. The challenge is, once you're in super stall speed and you can't get things to rise again, you could be screwing up things for the long term. My thing is, this actually plays into what I'm thinking, which is if they were going to apply a strategy like that, they're going to have to apply it very early, because once the midterms come, the Republicans, if they're still in this pocket of recessionary, impact, they're going to get absolutely slaughtered. And so every policy decision that needs to be kind of pushed through needs to be pushed through now. And if the economy is not strong, or if the economy is not doing well by 2026, the end of 2026, the Republicans will lose the House, they'll lose the Senate, and then Trump's entire next 2 years is basically going to be fending off more impeachment hearings for the next 2 years, and he'll be a lame duck. So I don't know. Some of this is economic strategy, some of this political strategy. So we have to figure this out. And as investors, we have to basically just keep our eye on the data and just say, okay, where are we going to be 3, 4, 5 years from now, and find the companies that can outperform the current market volatility, over the long term. So, and whenever these good deals come around, just be okay to be buying them and hold your nose and do it.
Nvidia down 5%. What, like, obviously you thought the earnings were really good. What is the market getting wrong about this narrative, or are they getting it wrong?
I don't think the market's getting it wrong. I think it's just uncertainty around Nvidia for the future. Like, how much demand is there actually going to be for products? Considering like some of the news that keeps coming out saying that, hey, maybe demand is going to peak out at certain points, or technology is going to, improve efficiency to the point where they won't need as many Nvidia chips. But I don't know. There are two conflicting arguments that are being made at the same time, because at one hand, you're seeing people saying they're capacity constrained, but then also at the same time, you're seeing people saying, look, well, we're actually very efficient with what we're using. So this is where you're kind of have to just use your better judgment to figure out, like, okay, where do you think this is going to go? And will Nvidia live up to the growthy prospects of demand in the future? Because I mean, you gotta admit, semiconductors in general are very cyclical. So
no, they are, but like, I still think the growth curves across all these verticals are not slowing down, at least for the next 2 years. Like, I don't think we see the type of slowdown the market is thinking. But if we do, then yeah, Nvidia's tough to buy right now. So I guess you have to be on one side of the fence or not.
I mean, some of the commentary that comes out of people are also something to just keep in mind. Like when Benioff came out last week during earnings and said, look, I think the hardware guys are making an absolute mistake building all these excess data centers that are not necessarily going to provide real value. I mean, at the end of the day, this guy is still, the CEO of one of the biggest companies in the market, especially technology firms. So when someone like that comes out and says something, people take note. Satya Nadella had some comments about something like that as well. So, people are second guessing the narrative that, hey, maybe Nvidia is actually going to go through a slowdown. I personally don't think that's necessarily the case. Everything that I'm seeing leads me to believe that there's so much demand out there that, and every day you're seeing more and more innovative products. So one of the things that I've started doing is just looking 5 years ahead and just saying, okay, like I said, which companies are the ones that have the best prospects for future growth? And one of them for me right now that I'm probably the most bullish, both in terms of valuation and market risk, is probably Google. I think a lot of people, and this was brought up during the BG2 podcast, that people think that Google search is sort of getting disrupted.
They talked about Google over the weekend, did they?
Yeah, they spoke about it, saying that, people feel like Google, this is the first time where, especially with Grok, that if you search some stuff with Grok, it actually saves you a lot of time, and you don't necessarily need to go through all the Google searches again. And I think the video that Joseph Carlson did actually is probably a lot better, in that Google is still the dominant player in search. You haven't seen any slowdown in their rate of growth on search. But then Google also has all these secondary and tertiary streams of income, which are still growing at a pretty healthy pace. That means that any slowdown in search revenue will more than be offset by some of these other divisions that are going to come around. So I'm looking at this 5 years from now, and I can't see a world where Google isn't a dominant player in a lot of the future technologies that are out there, whether that be autonomous taxis through Waymo, whether that be YouTube. I mean, who's the next YouTube competitor? Is there anyone else?
So I agree with you, but to push back a little bit,
yeah,
if Grok 3 just keeps getting better and better and better and better, and people legit stop using Google, not today, maybe 2 years from now, is the market pricing that incorrectly, that eventually search slows down?
I think that's the thing, right? That's why the market is discounting Google so heavily compared to the other mega caps that are out there, right? When you look at the valuations on Google, they're trading at a forward PE of, I think right now, based on today's prices, like 17, 18, right? Which technically doesn't make sense because they're just buying back so much shares. Their cash flows are getting better. They're operating more efficiently. But once again, this is how the market's interpreting it. I know people are always going to be looking for how to mitigate risk. And if they think that the risk of Google being disrupted is growing by the day, they're going to decrease their allocations toward Google and increase their allocations towards other things. So it's not, I personally think it's a buy the dip opportunity. I think the other sectors in Google are going to do exceptionally well. They have a great buyback program that's buying back a ton of shares. I do wish that they would just stop this stupid dividend. It doesn't make sense. and instead just take that additional cash and just deploy that back towards share buyback, which is a
That's,
lot
that's
more
like what,
capital efficient.
$5 billion a year they're spending on the dividend, something like that.
I think right now it's like based on last quarter and 12-month trailing, they did about 7 billion. So I think instead of that 7 billion going towards dividends, I think they probably would have been better off just buying back shares right now while the stock is depressed. I mean, they're still doing roughly 60 to 65 billion, but I'd rather them do 75 billion in share buybacks.
Yeah, and we did have that headline over the weekend of I don't know if you saw, but Sergey Brin is working 60 hours a week.
Yeah.
Or now he's saying 60 hours is a sweet spot for their. So I mean, they're definitely still trying to be competitive here when it comes.
Yeah,
to
and there's other factors. Like if you really look around Google, there's other things that should be pretty bullish. Like I don't know if you know, like some of the. Have you ever heard of this thing called OpenRouter by any chance?
No. What is that?
So if you look at Google's listing on OpenRouter with the amount of people actually utilizing Gemini, it's actually growing pretty well. Like so. Google is trying to be very developer focused. And from what I can tell, like a lot of people that are building applications, they're actually utilizing Gemini as a part of their tech stack. And so in the future, you could see that growth. I also I'm looking at Google partnerships around on, like just all around. And Google seems to be partnering with a lot of different companies and even nation states on doing things around AI. So they're really trying to entrench themselves. Google also has their hardware division with TPUs, so there's a lot of things that I think the market is getting, I wouldn't say wrong, but they're just being a little bit cautious they don't necessarily need to be that cautious. And just the one thing I will say is my long-term outlook for Google is strong, but if I do see search starting to weaken a little bit, I may hedge my position only because I know that the market might overcorrect.
Yeah.
And we could see like a 2022 style drawdown where basically, growth fears just knocked all these people out and we had to take a huge retracement. So, yeah.
Okay, last question for you, Kris. Let me get your take on this. So we got all the ISM data today. We missed on pretty much every single metric, came in worse than expected. Construction spending, for example, down 0.2%. The market thought it would be up 0.3%. Does all of this mean we legitimately have a problem with growth? And could that actually affect the labor market?
I mean, we do want some level of increase. I mean, as a person, you don't want to see more unemployment, but as a person who's in the markets, one of the things that we want is we want more rate cuts, primarily because there are certain industries that are basically been frozen because of it, because of the higher interest rates. And so longer term, if we're able to get our inflation metrics in check, that means that we have more room to cut, in which case it could revitalize some of these other industries. So as an example, shelter is one of the key things that's, in my opinion, keeping inflation somewhat elevated for a longer time. So if we see a more exaggerated move downwards on shelter, that pretty much seals the deal for me to say, longer term interest rates will come down, which will incentivize people to sell homes and buy homes. And that should raise that transaction process. And usually that's a good place for growth. Also, new construction, if you can lower down the interest rates, that means that new construction is more affordable to build and also finance. So I think a lot of what we're seeing right now is the economy definitely is starting to weaken, but I'm not so sure it's a bad thing.
Yeah.
That's what we kind of want a weakening economy, just enough to the point where inflation gets back on track to the 2% that we need, but we don't want it to absolutely crash, right? And I think this is where the Trump administration and its policies are I think their basic ideas is working, but in terms of like us as investors, we're feeling the pain short term. So long term, I think we're good. We're going to be in some gain territory, especially by the year end. I think we're going to be great. But right now, we just got to suffer the volatility. This is a great time if you have some cash, if you have got some great companies in mind, and if you're holding back on investing, right now is a great time to be in it. So I have some cash on the side. I may actually deploy it. Believe it or not, I'm considering doing a cash out refi on my condo.
I thought you were gonna say, believe it or not, I'm getting ready to buy Palantir, but you
No.
let me down.
The reason why is because I have like a sub-3 mortgage on my condo, but the value of my condo has gone up about 2.5x, right? So right now I could do a cash out refi, take out a good chunk of that money. And then what I could do is take that money, deploy it into some fixed interest, like, some stuff that I have that can yield between 10 and 12% right now. And then the mortgage company that I like, one of my friends works at, has this thing where they do a one-time refinance without any closing costs. So when rates come down, I could just refi. And now what happens is I capture all that additional interest from being in that investment. So now I'm making money on the spread. So imagine right now getting paid $11%, right? Taking on a mortgage for, let's say right now, they probably charge me about 6.25 based on today's 10-year. So 6.25, if I can generate 10 to 12% return on that money, borrow it at 6.5, I'm getting a 6% spread on it. But the benefit for me would be that now if interest rates go down and my mortgage comes down to, let's say 4 or 4.5, I'm still collecting 11, 12%. So my spread grows to almost 8% return. Not to mention the assets that I have are trading below par. So if I buy it and it goes back to par again, that means that now I'm making money on the capital return and making money on the interest that I'm collecting.
Is this is your Georgia condo or your New York?
Yeah, my Georgia condo.
Because you sold the New York one, right?
Yeah, my New York one. I took that money, I gifted it to my father-in-law, and it's basically generating really good income. Remember I told you about the strategy that I said? Yeah. I mean, so you have to just optimize how you're doing things. So
this is a good question. Yeah, why not use margin? Why do it this way?
What do you mean, why use margin? The difference between refining the condo is that it's at a fixed rate with fixed things. With margin, let's say the market goes down, now all of a sudden you get a margin call. With a condo, you're not going to get a margin call. So let's say the price of the condo drops 20%. Doesn't matter. It stays, my mortgage is my mortgage, right? Gotcha. So that's the other thing is the mortgage interest is tax deductible, right? So me being in a 30% tax bracket, on the federal side, another 6% for Georgia, it's like a 36% that I have to basically be saving. So even if I paid like 6.25% or 6.5%, 30% of that is going to come back to me in the form of mortgage interest deduction on my taxes.
And the way you plan to get 10 to 12% on your money is just by investing it in whatever strategies.
Yeah, some preferred equities that I have right now that are good. That right now that are trading below par only because the interest rates are high, right? So when they issued some of this debt, like preferred equity, it was trading at about 6% yield. So now when interest rates, kind of spiked up, people are saying, well, why would I want to be in something like that when I'm getting 4 or 5% from the US Treasury? Right. So now they're trading below par. The good thing is once interest rates come down, people are going to be chasing yield again. So if you look at what happened with Verizon, remember last year, Verizon was trading at $30 a share. And the yield on the dividend for Verizon was close to 8% at the time. Yeah. Right. And Verizon's a great company. They're long-term. They're always growing their dividend. So what happened was as the interest rates started to come down and inflation started to come down a little bit, Verizon's stock price went up. But the thing is their dividend, which you paid at a $30 cost basis, is still there. So you're getting paid that 8% return. And Verizon, as it goes on, is going to be increasing its dividend over time. The other thing is Verizon's a capital heavy business. So as they pay off their debt, and the interest rates get cut by the Federal Reserve, now new debt can be refinanced lower. And so now their margin actually expands. So whenever you find like these companies right now that are capital heavy businesses up front, they took a huge beating when interest rates were high, but that also acts like a tailwind for them going forward in the future. So if you look at, go to Verizon's chart and you'll see what I mean.
Yeah, no, you're right. I mean, it was at 27 in 2023 and then
just look at the 5-year mark, right? So look at that. It dropped all the way to 27, right? And then it went all the way now to 43, right? At $27, the yield on their dividend was almost like 8 point something, right? And Steve mentioned it to me. I looked at it. Now the yield is 6.25. So even if you bought it at 43, you're going to collect a 6.25% dividend. But if you bought it at 27, you're getting almost 9% dividend. And by the way, Verizon's dividend are qualified dividend. So you're not even paying like ordinary income on it. You're paying preferred dividend income. You get paid in preferred dividends, you know?
Right.
So
People are saying margin is tax deductible. I didn't know that. That is interesting.
really? I didn't know that either.
Is that true? Is that true in the chat? You can deduct your margin from. I did not know
I think
that.
against gains you can. I'm not sure if you can. Hold on a second. I got to double check that, man.
That is interesting. I don't know if that's accurate.
So here's one of the things that people like. I really have to say, like, so Tobias says, dude, Verizon sits on 160 billion in debt, correcting for cash. Stop talking BS. Do you understand how much money these guys make in cash flow? Yes, they own basically all this infrastructure. Where do you think that, like, literally you've got years and years, if not decades of infrastructure, right? Just because a company has debt doesn't mean it's a bad company to be in. So, you know, I think people get that. And I understand it. People say, look, I look at the debt number and I'm automatically like, yeah, this is not a great place to be. Like, no, you have to look at the cash flows and how can they service that debt. The other thing is, if you look at Verizon's debt and you look at the cost to service it, the cost to service their debt is actually very, very cheap, because they issued a lot of this debt long term when we had ZIRP, and it doesn't mature for a very long time. So. And that's like saying, like, just because you have a mortgage on a house, like, you're bankrupt. Like, no, if my cash flows are good, it doesn't matter how much I have a mortgage my house for, you know.
I agree.
Yeah.
All right. Last thing, Kris, you want to tell them what you told me on Friday? What you called me about saying?
About what?
About a little stock called Hoodie.
What?
Hood, your credit card.
Oh yeah. I got that gold card, man. The actual solid gold card. It was actually it's really cool. I like it. I haven't used it yet. I just feel like the one bad thing about it is that, like, imagine you go to a bar and someone knows what that is. I have a feeling that it's just gonna disappear, because they could just melt it down, and that's like $1,700 right now.
Wait, you have the solid gold one?
Yeah.
Oh, I didn't know. I thought you just got the regular. Holy crap!
No. I got the solid gold card because
don't sell it to buy the dip, because I know you. I'm
not gonna sell it. It's a moment. I'm gonna keep it. It's great. One of the things that I was wondering before I got it was, you know how your card has the actual number on it and the expiration on it, like, you know, with the expiration date, like, how am I going to get a new one? But it doesn't have expiration. It doesn't have your number. It does. I don't even think it has your name on it. I think it does have my name on it. I have to double check. But basically, it's very clean, and everything is linked to the app on your phone. So you can, you know, the really cool thing is with the app, you could just basically turn it off, and basically now no one can use it. You know, that's a really cool feature on it. But like I said, I'm scared. Like, if you go to a bar, bro, if someone knows what that is and they feel it and they see that it's actual gold, that shit's just gonna disappear. Like, you better be very careful. Otherwise, I mean, bro, if I saw it, you know, it's 17. Like, based on today's gold prices, it's $1,700. I looked. You know,
it's good money. Yeah, I gotta keep it. I mean, if you keep it forever, it's a little bit of gold you got constantly. So
yeah, it's very interesting. Yeah.
All right, Kris, thank you. Appreciate you as always. We will talk to you later. Kris's Twitter right there in the chat. You guys can follow him there right on X.
Take care. Have a good one, guys.
Kris. Thank you. Okay, let's hear from Ed Yardeni. He's live right now and get his thoughts on what's going on. Again, that Trump $100 billion announcement, that is live with TSM. We'll probably get more data on that soon. Maybe that's what the White House meant by saying there's going to be an investment announcement today. Maybe it's the Trump TSM thing, which is cool. I think more people thought it would be for the strategic reserve, but I guess we'll get more updates around that at 1:30 when Trump is in the Oval Office.
These data signals we're getting, the latest just this morning on ISM, new orders with a big flip.
Yeah, that was a bit of a setback to my thinking on the economy, because the regional business surveys conducted by 5 of the 12 Fed district banks actually suggested it would be stronger. So we've got 5 regional surveys looking better than the ISM. So I'm going to go with the regionals because they support my view that the economy underlying it all is resilient. Look, we just had 3 years where it was widely anticipated that we'd have a recession because the Fed raised interest rates significantly, and yet the economy remained resilient through all of that. And I think we have to learn from that experience that perhaps the economy is going to remain resilient. I think some of the weakness that we saw in the indicators for January had to be weather related. It was the coldest January since 1988. And so, yeah, I do think retail sales are going to snap back. I think employment could be big, up more than the consensus expects, maybe 200,000. Obviously, much will depend on how much of the Doge boys layoffs in the government are going to start showing up in the February data. I think most of it's going to show up in the March data. But all in all, I think the economy is, in fact, going to demonstrate its resilience. But I think more of it's going to be showing up in the second half of the year than the first half. The first half, we just got a lot of volatility around all the uncertainties unleashed by Trump 2.0.
What about tariffs as they start to play out? I mean, just as an example, autos, right? Kelley Blue Book says the tariffs could raise the U.S. average price of a car by $3,000. It's already $49,000. The price of some full-size pickup trucks could shoot up by $10,000. What about the demand impact of tariffs here?
Well, I think what we have a fluid situation as the administration just characterized the Canada-Mexico tariffs. We'll see. We still have a day before the tariffs go up to 25% on Canada and Mexico, and I'm sure there's a lot of negotiations going on. Mexico's already come back and said that they will slap the same tariffs on China as the United States is slapping on China. So we may find that the whole situation looks somewhat different tomorrow. But I think a lot of these tariffs are not retaliatory so much as reciprocal. The idea is to raise tariffs, mostly to match tariffs of our trading partners and then negotiate them down. So I think at the end of the day, when this all settles out, there'll be a lot of negotiations that actually lead to lower tariffs by our trading partners rather than a retaliatory situation as we had in the early 1930s with Smoot-Hawley.
But I do wonder what that does for earnings, right? For companies that either have to absorb it or pass it along, what it does for their spending plans as they try to figure out the new cost structure and try to figure out where the tariffs are going to hit next.
Well, it's not good if these tariffs obviously are permanent and persistent rather than transitory. It kind of reminds me of the discussion we had way back when on.
I think pretty much every analyst's take is that, yes, the tariffs are bad, but we hope it's not in perpetuity, which is why they're willing to overlook it and still be bullish. But nonetheless, pretty much even Tom Lee, Ed Yardeni, these are really big bulls. Their argument is that tariffs are not going to be the best.
Whether inflation was transitory.
Yeah, don't use that word.
persistent.
That's like a jinx word, transitory.
Sorry about that. But I think you're right. I think in the short term here, it creates a lot of uncertainty about earnings. And we are seeing analysts lowering their earnings for the first quarter. So they're obviously reading the newspapers, reading the headlines, watching you guys, and recognizing that right now, the way tariffs are going, it's not good for the economy. It's not good for earnings. We did, I would point out, have record earnings in the fourth quarter, and they were up 14% on a year-over-year basis. Analysts at first thought they'd be up 8%, again showing the underlying surprising strength of the economy and the ability of companies to increase earnings. And I think that's going to continue to be an offset to some of these other concerns. In other words, we tend to pay a lot of attention to what's going on in Washington, and Washington matters, but we often forget to recognize how well the economy does despite Washington. And that's kind of the thesis I have, is that the economy is going to prove to be resilient, notwithstanding Washington.
All right, Ed, thank you for joining us with that dose of optimism.
All right, we as we're watching this, we got Howard Lutnick on CNN as well, trying to defend some of the stuff that the Trump administration has been doing. So let's listen to this for a second, then we'll keep going.
to mediate.
There's no
he wants to
discussion to
negotiate.
withhold aid because I've read the New York Times. I believe will be there. There's going to be a meeting about what to do and how to respond.
Well, I
You
think the
that would
president's
happen?
going to exactly consider what to do and how to respond. He's going to figure out what are the tools that he can use on Russia and what are the tools he can use on Ukraine to get them to the table. Like any great mediator, he's going to beat both sides down to get them to the table. And so, yeah, he said it at the meeting. He said, what do you want me to do? Say, call Putin a terrorist and then call him up and say, hey, I'd like you at the peace table. Come on, he's got to be
But
both
does
sides.
he actually think he's a terrorist, but he's outwardly not saying that because he knows that won't help with negotiations?
We've given $300 billion to Ukraine. Is it difficult to see what side we're on? Give me a break. I mean, this concept of people getting confused is absurd. The president is on Ukraine's side, and he said it. He said, I'll give them more military aid. He said it, but he said he'll do it if he can get to peace. And he needs peace. And he needs President Zelensky to say, I want peace. And he wants Putin to say, I want peace. And then the president will bring them together. And you'll see the greatest peacemaker because he knows you got to hit both sides in order to get to the middle.
Mr. Secretary, one quick point, though. You were there in the Oval Office watching all of it unfold. Didn't you see the Vice President, J.D. Vance, begin the angry exchange with his tough words about Zelensky? And that was in front of all the TV cameras.
I mean, what he said was, we knew Zelensky would put on a show for the press, right? Because he wants to look good at home, look strong and all the rest. But we figured it's got to end after 10 minutes. It didn't end after 20 or 30 or 45 minutes. And what did J.D. Vance say? Please say thank you, and let's not litigate this disagreement out here in front of these cameras. Let's go back and talk about it then, but at least say thank you to the president. If you think that is attacking President Zelensky, then you were in a different room than I was in, because I thought that was reasonable and appropriate for him to just say, thank you for $300 billion. Thank you for being on my side. I want peace. I'll be with you, President Trump. Let's go figure out how we can do it together with power. And let's use this mineral deals to show that the United States is behind Ukraine, and let's go force Russia into a reasonable peace deal. That's what J.D. Vance was trying to do. That's what President Trump was trying to do. That's what all of us expected. And we had no idea he was going to be not a peacemaker.
Zelensky has thanked the U.S. many times, maybe not in that moment directly to Trump, but was it planned that J.D. Vance would be the one to interject if he continued, in your all's view, to play to the cameras? Because it is unusual for a vice president to interject like that. Was that sort of discussed before the meeting?
Absolutely not. Okay. We had no idea this was going to go this way. You would just assume he'd play a little bit for the cameras, right? And then he would be thankful for the president for the incredible aid that America has given. $300 billion. You got to say, we love America. We appreciate America. You know, we want you by our side. And if you think we should have peace, we should have peace, right? But instead he said, I want $300 billion in reparations from Russia. I want them off my land. I want all the land, really, all the land and reparations and security guarantees. The answer was, it's just way too far. That's not a peacemaker. That's a troublemaker. And that's what the president saw. And he took it for 40 minutes before and 45 minutes in front of the camera. And then it was just enough already. Enough.
All right. Thank you.
So obviously Howard Lutnick has his own interpretation of what happened. I'm sure a lot of people have other interpretations. Here's the poll I'm going to ask in the chat. 48 hours after the public exchange that we saw on Friday, simple poll. Do you think Trump or Zelensky was right on how they acted in the Oval Office? If you pick Trump, then you had no problem with him kind of being as aggressive as he was. If you pick Zelensky, then you're basically saying, you know, Zelensky stood up for himself, stood up for Ukraine, and that Trump and Vance were a little bit more of too intimidating in the White House, and that wasn't the right thing to be seen in public. I'm curious, because on Friday when I did this poll, it was 50-50. And it is very interesting. I spent the weekend looking at a lot of perspectives from people in Ukraine, from obviously people in the United States that are kind of pissed off about how much money we're sending. And it's obviously a very polarizing topic. The administration has their own way to frame it. I personally believe the minerals deal is going to get done. Zelensky already said over the weekend that he wants it to get done. And also, I think eventually this will lead to some level of negotiation with Russia, and we'll get a deal. But the question is, you know, when that's going to happen and how that's ultimately going to play out. Zelensky was on Fox. I just want to play a quick clip of what he was saying right here in terms of his perspective after the exchange with Trump.
Do you think your relationship with Donald Trump, President Trump, after today, can be salvaged?
Can be. Yes, of course, because it's relations more than two presidents. It's the historical relations, strong relations between our people. And that's why I always began with to thank your people from our people. And this is the most important. And of course, thankful to President and of course to Congress, but first of all to your people. Your people helped to save our people. People, the first. Human rights, the first. This is very, very important. And we are thankful and sorry for this. I mean, we wanted very much to have all these strong relations, and I very count that we will have it.
Last thing.
So Zelensky right here, right? Basically, you can kind of tell in that clip, he wants the deal to get done. And obviously, just from a negotiating perspective, he knows that he needs the United States on his side. I think the United States knows that as well. Granted, the exchange they had in the White House was a lot of both sides going back and forth at each other. It really did feel like a show, to be honest. And it was just, I was weirded out by the whole thing in terms of how it played out. Nonetheless, it happened. And I don't think whatever happened has any implication on getting that deal done. Although in the short term, it's like, yeah, it's making a lot of headlines and the videos going everywhere. But I think we're getting a deal done because both sides, I mean, Trump does not want to keep sending more money. He wants there to be some level of a peace deal. Russia is starting to want to come to the table based on what Trump has been saying. And obviously Ukraine, based on what we saw from Zelensky right there, 2 hours after that exchange with Trump on Fox, he says he wants to get a deal done. So I think regardless of the theatrics that we saw on Friday, a deal will get done. And the question is just going to be, when that deal ends up getting done. In the chat right here, it's 50-50 again. It's 51 Zelensky, 49% Trump. But this is what I mean, dude. It's like there is not an overwhelming Trump was horrible, Zelensky was horrible in that Oval Office. And you can tell if you're just reading through the comments on X, scrolling through on these topics, it is very polarized, very divided, but it's not objective on one side being the right actor or one side not being the right actor. I think everyone can agree it was crazy that exchange happened on Friday. But everyone is also really divided on how this one ends up playing out. Where is Nvidia? All right, so we talked enough about what's going on with Trump and Zelensky. Nvidia right here, 118, still down 4.8%. S&P 500 down 0.12. Hood just above 50. Meta at 669. Market's actually relatively boring. I mean, it was pretty green in the pre-markets, ended up going red. We're back to being green, but it's a very slight green, like SoFi 1448. That's green, but that's not almost $15 where it was at 930. Tesla right here at 298, not at 291, but also not at 305. So nothing too crazy. Bitcoin holding on to 90, maybe going back to 91. TLT continuing its green run as the 10-year comes down. ISM data was definitely not the best. And we heard Kris's perspective and Yardeni's perspective on it. Palantir holding on to its 4%. But the broader market's basically flat. You got some stocks that are aggressively down. The S&P is flat. Nvidia is down 5%, but everything else is kind of up about 1 to 2%. Nothing too crazy there. Yeah, nothing's really dumping, but nothing's really pumping as well. I guess a 5% dump on Nvidia is normal now, so no one's taking that to be that different from before. Any other headlines I'm seeing? So details of the Trump TSM announcement are coming at 1:30. And Trump will decide on tariffs on Monday afternoon. Okay, so we got two headlines. 1:30, we're going to have the details of the Trump TSM announcement. So that'll be happening in a couple hours. That's probably the big White House announcement that the White House said they were going to be doing today. Doesn't look like it's going to be the crypto reserve. It looks like it's going to be this. We have the State of the Union tomorrow. I'll be live streaming that tomorrow. So that'll be starting at, I think, 8:30 Eastern. Trump will address Congress in a joint session. So we'll see what he says there. And then tariffs, it looks like we're getting a decision based on what Howard Lutnick said today afternoon, probably at that same announcement at 1:30 when they do a press conference. And so it looks like we'll get more details later throughout the day. Okay, I think that's it. I think that is it. Equities relatively green, flat to green. TSM now getting flat. It was down 5%. Now it's only down 0.5%. Palantir still holding up 4%. Not too bad. S&P 500 is flat. Hoodie, I wish we were at 55. Unfortunately, it might take some more time to get there as Bitcoin continues to be volatile, but we're still above 50, which is nice to see. Grab right here at 494. That's up about 2%. Baba's at 133. SoFi 1447. And then you got NVIDIA still down 5% on the day. Look, hopefully Monday or hopefully March is going to be better than February. But in general, it's even hard to complain about February, dude. Although individual stocks sucked, the indices were fine. They were down maybe 1 or 2%. So it's not something a lot of us can really complain about. But obviously, if March is a bit better, that definitely wouldn't be the worst. I think we need a good CPI. We need good retail sales. We obviously need better manufacturing data than what we got today. We'll see next week kind of how that turns out to be. And then we need technology and earnings to still hold up the way it's been holding up in Q4. If we start to see a decline in Q1 on earnings growth, that's not going to be pretty. And so that's another thing we really got to see if that can hold up. And I get people that are sympathetic to this as a bull trap, even though we're in extreme fear. But certain stocks, if you're thinking it's a bull trap because we got a lot more pain coming, I'm sympathetic to that. I'm just waiting for the data to see if we get as bad of an economy as some people are predicting. All right, cool. I think that is pretty much it. At 1:30, we will get these Trump announcements on TSM, and then we'll keep going from there. Yeah, we talked about Yardeni. If you scroll back a little bit, you will see him talking. He's not a fan of tariffs either, but he thinks that it's more of a growth scare, a wall of worry that we're going through right now versus a legitimate decline in the overarching economy. All right, cool. Monday morning, folks. I went to the gym. I'm happy. Got back into a little bit of a routine. Got a bunch of work to do now, but hopefully we're starting out March fresh, and we will keep going from there. Let's do the first word of the day for the month of March. Okay, this is an interesting word. Let's see what you guys think of it. What's your hood spread? 95 to 100. 95 to 100. 2027. I am basically calling on hood to be 100 by 2027 January. We have S&P inclusion, by the way, on March on Friday. On Friday, we get the new rebounds. A lot of people have been asking, do you think hood gets in? The answer is no. I don't think hood gets in this time. I think in June they get in. And if they don't get in June, I think December they definitely get in. But if they get in this week, I mean, that'd be a big catalyst. I don't think it's going to happen, but I do think eventually in 2 years, hood's closer to $100. Also, we have Hood Weekly that's coming out tonight. We haven't been doing it for 2 weeks because Tanner was sick. It's always Tanner's fault, but we will have Hood Weekly later today. Okay, word of the day is decoct.
Decoct.
To extract the flavor or essence of something by boiling. The chef knew how to decoct flavors from natural ingredients to create concentrated versions. Decocting herbs and vegetables for too long may strip away their nutrients and produce unsavory compounds. Okay, this word is boring. Let's do another one. Let's go to vocabulary.com. That's been better for us. Okay, this one's kind of weird too, but let's see. Let's see if we have the seductive voice on this one. Coruscate.
Coruscate.
Okay, this guy. Then where's the girl, bro? The girl was better. Coruscate is a verb that means to sparkle or give off reflected flashes of light. Think of the way little mirrors on a disco ball coruscate as the ball twirls, making the dance floor sparkle. That's a hell of a word. Like coruscate, sparkling, huh? I feel like that's a way cooler word. Dance floor sparkle from a disco ball. All right. Hopefully the market coruscates a little bit and we get some glitter and shine to these equities that have been depressed. But we are going to see. NVIDIA right here, 118.75, down 5%. I'll be back on the market close, see how this turns out. Palantir holding up at 3%. Bitcoin just above 90. You got Google at 170. And then again, you got Hood that's going red, but holding 50. Palantir right here at 87.74, up 3.34%. All right, cool. Thank you, everybody. We'll be back on the market close. Real quick, do we have any earnings today? Let me check as well. I don't think anything too crazy. Today, GitLab, Okta, and ASTS. I know a lot of you guys like the space company, so that one's important. GitLab's a software play, Okta's enterprise SaaS, and then SMR, nuclear. So we do have some interesting earnings that we'll take a look at today. And we will go through those on the market close as well. All right, cool. Thank you, everybody. I will see you guys in a few hours. Bye, everyone. Have a good one.